Good morning. It is Thursday, the 5th of June. You're into Trade Live with IG, and the back from his holiday.
Hey, how are we doing?
Mate, well tanned.
Thank you.
You look relaxed.
It was.
How is Jet 2 holiday?
Yeah, it was very nice. Thank you very much.
Yeah, the old package trip. What was the highlight?
I would say food and drink.
And a lot of it.
Yeah.
Because it's
Broke even though on the old sort of gym run, intake, offtake, etc. But yeah, all good.
weighed yourself in your
Pretty much, yeah, rock steady.
Excellent. Right, good morning, everybody. We've got Elon getting a bit escalating, let's say, his demands to kill the bill. So when do we think that Trump is going to break? Because Elon's already on. He was, you know, when you're in that rage, you're having an argument with somebody on text message. He does it on Twitter to, how many? 50 minutes or whatever. So
Probably more.
At some point, Trump is going to stand for this.
Yeah.
So that's going to be interesting. But what else have we got coming up on today's show? Well, action with Mike and the big Kiwi. Then decoding crypto. Look at that. A crypto section. A new crypto section. What's happened there?
Nice.
So that's with Angeline at 8:35. Then Aaron Bright's joining us for experience. And Angeline and Jolie are on 35. So we've got a few things there, but I think, you know, Elon's the one that's really interesting because Tesla sales got hit again in the US auto sales.
Yeah, China and all sorts. And they had a torrid time yesterday, down to what, 330, I think. 70s.
Some wise person bought the 330 puts as soon as he said it on Tuesday for Friday expiry.
Oh, right, nice. I mean, I guess there's still time for it to rally a little bit. It's on your level. Oh, right, okay, fair enough.
Yeah. Okay, so let's go into some overnight action because we're going to be talking about into wellness. That's right. I've left you on that hook now. Did he say intimate wellness? Pete Ward about. We need some romantic music. What am I talking about?
I am talking
about. Yeah, we didn't prep this bit. Should you buy shares in Reckitt Benckiser right now? That's the question Tempest is asking. Now, of course, Reckitt has had a really rough few years. 2006, it bought Mead Johnson, the baby formula company, and it's had this huge litigation against it. But they're trying to clean up their act. They're using a bit of sillet bang on their strategy.
Like it.
And they did a investor day week. And so this is basically, it sounds like the the Times newspaper was invited along. And yeah, an investor seminar was talking about the future. And I think it was Barclays came out the next day and said, yeah, we think Reckitt's has got a bright future.
Yeah, I mean, this was one that, I mean, it felt like it was always going to kind of weather the storm when that stuff came out about the baby formula, because it dropped down to, I think, about £40 a share.
Yeah.
And you think, well, you know, these sorts of big companies, they're going to brush this sort of stuff off. There might be a lawsuit, they'll settle something, they'll get through it. They're not going to go broke. Yeah, as we've seen now, 25% move back from the 40 back to 50.
Oh, it is, isn't it? That I tell you what, that doesn't look much. It's 25%.
It's pounds, not pence.
Oh, look at you spotting the error. And
wish you could get them for 50p.
Yeah, exactly.
£50. But yeah, they got down to 40.
I think of a stock that you could buy at 40 pence a while, and now a pound stock. We'll come on to that one. Right. Yeah, so that's quite interesting. It's a nice little article. It's the Times saying, should you buy? And their final, their summary is at the end, once we get all the advice, the core business growth and market consolidation potential for patient investors follows the restructuring, but the restructuring is kind of edging back and edging.
What's the intimate wellness part?
Oh, you know.
Lyrics?
Yep.
Yeah.
All their various categories.
Yeah.
But yeah, it is quite funny, isn't it? The group of Silitbang, Nurofen, and then some. Says the man with the 2 children and the snip. Right. Okay. What else we got cut?
Thank you. Yeah, he's looking sharp. Cheers.
Do you have to get it cut when it's a wig?
Huh?
Do you have to get it cut?
Very good. Yeah, I can't take any hair jabs from you, sir. I'll lend you some.
I have noticed a couple of times actually. When I'm down like this, then yeah.
Showing your age, you're really 65.
Yeah. Yours. Right. Well, what else we got? Shall we just dive right in? We want to know, don't we? Maturin sitting at home saying, what have they got about this morning? It would be the smarter thing to discuss. Well, the smarter thing to discuss is
here we are.
The £13.4 million that was raised by the Smarter Web company last night. That's above what I thought it could be. Yeah. I thought he might get 10 when he announced 8, because of course the previous round he had tried to raise 4 million, 6.8.
That's right.
But he's gone in for 8 and he's raised 13.4.
Yeah. So what happens in a scenario like that? Like, is it a case that you go in for allocation and you get scaled back and you only get a portion of what you asked for, or do they just give you more because they've raised more? So
no, this one was different. There's actually a technicality here that regulations he could only raise another £400,000 worth in a WRAP.
Yeah, the retail.
So the retail. Yeah. Yeah. So you can see there.
So the rest is what institutional buying.
The rest is build at the offer price. The offer price 81 pence.
Yeah, and you had what in there 3 weeks ago, and the share price was
32 pence.
Was it 32? I mean, it was wild at the time. It was going 54 to 18 to 20 to 25 to I mean, it was all over the place. But then once they got this sort of show of strength in, and then started to make the purchases, gave it more authenticity. So yeah, interesting. Really.
So this is interesting. In total now, he has 6 million sterling. Just get I've gone a bit too. Yeah, 26 million pounds he's raised, and then you put that on some kind of multiple, whatever that is. Between 6 and 9, these things trade. It starts to get quite because that would, let's say 8. 8 times 26 million? Who's a quick position on that?
220 million.
220 million, right? And there is. And there's what's that?
I said me is the answer.
Yeah. And there's now 204 million shares, right? So of course he diluted the number of shares, and therefore as an existing shareholder you do get diluted, but the amount of Bitcoin purchased is big. So 220 divided by 204.
Accretive, I believe, is the term. Whilst they're still purchasing more, you're getting more Bitcoin per share as they buy more. Very interesting. I've looked at it a lot, and I've looked at that with correlation with MicroStrategy and their scheme of how it works, and this whole MNAV scenario. It's a whole new world, isn't it?
Yeah, a whole new world.
Crazy.
I thought it was Disney last time. It wasn't your holiday this time, was it?
It was not. No, it wasn't. It was a very different holiday, and the this time, which was great.
Was
it nice to go away and not see the market down 10 on a Monday morning.
It's the first time that you.
I'm sure before I went away, just in case. I was like, I literally selling the market to lose money, hope that the hedge is on so that if everything I do wake up, I'm not ruining my. So yeah, no, it's much better.
Right. Any currency on holiday?
Did I change any currency on holiday?
What do you use? Do you use Revolut?
Revolut, yeah.
Yeah. So I'm a Revolut man as well. But Wise are doing their own currency change this morning. What have you seen on that?
Let's have a look a second.
They are
moving, aren't they? Yeah.
Priming to the US. Let's take the story. There we go. So doing its currency swap of the exchange that it is listed on from London to the US. Yet another one.
Another one going over the pond.
Yeah, let's see. I actually haven't looked at traded over the long term. Yeah, it's doing all right, isn't it? And is there really a need to swap? I wonder what they feel like they're getting from
it
that.
just unlocks a whole new audience, doesn't it? Generally,
yeah.
The rationale for it, a bit more progressive, etc. Gravitate over there. Yeah, interesting one.
Well, yeah, that takes us on to our next story, is in the Times today, and that is that US exceptionalism. Actually, sorry, no, it's not. It's in the Financial Times. Big investors shifting away from the US markets. So this carries on from the US exceptionalism. Is it as exceptional now? And they've actually got comments from two fairly big players. One of them, Seth Bernstein of AllianceBernstein. And he is saying people need to rethink their exposure to the US. The deficit's been an issue, which is, of course, what Elon's highlighting. It's just getting worse, and it's possible for US to keep borrowing. So should you want to be as concentrated in one market?
And does he mean specifically the US as a whole, or does he mean US tech?
No.
Okay.
Yeah. He's saying you shouldn't have equities, US bonds.
I think there's a lot in that.
American.
There's, I talked to a good client of mine of the same view, which is basically that whilst Trump's done all this stuff with tariffs and with China and with the rest of the world, really, from banning nationals coming into the country to trade tariffs to trying to get involved in foreign policy with all other different global scenarios going on. Is it a case that actually puts people off as investing into the US or try and become more protectionist?
Yeah.
Does that actually devalue their attractiveness as an investment? And I think it's probably right to some extent. His view was that all of the stuff that Trump's done has only really led to a strengthening of the alliance between BRICS, Brazil, Russia, India, China.
Thanks for that.
And
what is it again?
BRICS?
Yeah.
That's right.
Go on. Yeah, tell everybody that doesn't know.
What? Well, not everyone might not know.
No, I'm saying, yeah.
Brazil, Russia, India, China, and maybe another. But yeah, you saw it with there's deals that's already been going on between China, soybean purchases from China into Brazil, which is mainly the only thing that China is purchasing out of the US. The reliance between the two is more heavily weighted towards America. I think needs more from them than they need from them.
Yeah.
And as they get it from other places, that strengthens that. So then you go, well, as an investment case, am I going to keep my money somewhere that's pretty much annoying the rest of the world?
Yeah.
Or am I going to move it to fast growth places, India, China, etc., etc.? And obviously,
UK?
you're not going to pile all your money into Russia, but at the same time, at some point, that tap will get turned back on. Yeah, the UK. From 8,000 to 8,800 before April, it was the place to. Everyone was piling. It in the way that the market was moving. It was, a fund basically just UK equities. It was a non-stop train. It just kept going and going and going. And that was because over here we've got stuff which isn't tech-led. Look at Rolls-Royce, £8.80.
This is it.
Real.
So money is definitely
Lloyd's,
being
ATP
deployed.
again. These things have been heavily.
Is Lloyd's at 80?
Well, near enough.
All right, yeah.
Between friends.
Yeah, that's going on with my background. Why is it all out of focus. You're making people think that they're getting squiggly eyes. You going to fix that? Look at the background compared with Pete's background. Oh, I don't know. We're going to get people writing in about that. My sister will be texting. Yes, South Africa is the yes.
Got you. Okay, cool.
Yeah. Right, let's take a look at the futures. We go full screen so the guys can try and have a play around with the. And yeah, so 5,905 on the S&P. What else we got there, Pete?
FTSE teetering on the 8,800 level, up and down through it yesterday, but really low volatility yesterday. I thought markets were quiet. I was on the US late shift last night.
Oh, were you?
And yeah, me and Tom were here in the office.
I didn't see much value added come through last night.
Yeah, I was doing boring not actual trades, but it was it did seem quiet. Like, you know, I think I got used to the high vol of April and into May, and it's just gone quieter. And I don't know whether it's that whole sell in May and all the rest of it, and things have just leveled off, or waiting for this data today from the ECB and the NFPs tomorrow to shape whether or not we're going to keep legging up higher or not. But I mean, May was one of the best on record, and it was kind of quiet, right?
It is a big couple of days, actually.
Yeah, it is a big couple of days.
Yeah, because the non-farm payroll is either we're going to see the start of a job slowdown, or it's further proof that they just don't care.
Yeah,
they just plow on, and nobody, there's a lot of worry, but nobody's actually stopping hiring or sacking.
Some of the initial data points are showing that they're having some weaknesses on the back of all the Trump, the tariff madness, rather.
Yeah.
So yeah, the NFP expected to come in at 130,000. I think previous 107. If that comes a strong number, that whole Fed dropping rates kind of gets kicked down the road for longer. Does that put a pin in the move we've seen? I don't know.
We'll have a look at the ADP yesterday, 37,000. So that was a little early. Is it the canary in the coal mine?
Yeah, often. Often that is the precursor, isn't it? And then ECB today, they've got their rate reduction expectation. I think it's going to be the 7th or 8th in a row, from 2.4 down to 2.15, so dropping basis points. Yeah, that's pretty much baked in, I think, as going ahead. But I guess the big question now is that do you get is there kind of contraction in European growth, which we're seeing continue, and they're dropping rates because they have to stimulate? And in the US, is it a case that actually maybe it just keeps going and going, right? And then what happens to Eurodollar?
What does happen to Eurodollar? That's the one that I have my mind's telling me there's no way the euro should be at 114, 115.
Well, you're going to drop into an R. Kelly song then.
My mind's telling me.
What's your body telling you?
Go to the gym.
Yeah.
Stop drinking these. Angeline brought a coffee in this morning for me. It's where is it from? Leon. It's terrible.
Oh really?
Sorry, Ange. It was a lovely
suggestion that counts.
Yeah. Right, Andrew McKelvey, as if we're going to cover that. Andrew McKelvey comment. Look at that.
Oh yeah, I saw a pre-market on the Marlows. They're indicating up.
It wasn't that one. It was the comment above that I was looking at.
Oh. Sorry. Yeah.
It's a pretty good number, though, isn't it?
Huh?
That's a pretty good number.
Well, it's a weird one. It depends how you read them. It's in line, I think.
Was it
talking there about CMC results? We're allowed to talk about them. So they've reported their net operating income that met the average analyst estimates.
Yeah.
Albeit operating profit of 89.6 million, plus 37% year on year, but the estimate was 96.7. So they had a pretty bullish target.
Yeah.
And they've come in under it. So it depends how you read it. You go 37% a year, but not hit target.
Right.
So we'll see. Pre-tax profit 84.5 million. Again, estimate 91 million, but their profit was up 33% year on year. So, yeah, we shall see.
Great. We're still struggling with GTF engine problem.
Yeah, they've been called down 2%. Revenue 5.27 billion. Load factor was 91.2%, and they've given no for financial year 26. So yeah, one to watch on the open.
Good. And then we've got some dividend Thursday. Who's a Vodafone shareholder out there? Yes, I do.
Not giving up on that.
Oh no, the core in the ICE has always been there. I trade around on the platform around the short put options, but
I know you're a big believer in it, but do you ever feel like there's a opportunity cost of holding something that's not moving as much when there's other things?
Do we have to go to the?
Bring up the graphs. Let's hear the investment theory again.
75.80.
What's the divvy? I think I've got it here.
Does that mean it would be 73p this morning?
0.225 cents euro.
So Tuppence coming out of Vodafone this morning. And then, I've butchered that chart there. And then Sainsbury's as well. You get 9.7 pennies.
Right.
With Sainsbury's. WPP, if anybody's, it's not one of the sexy ones, is it?
WPP. No,
you wouldn't be
24.4p.
24.4, yeah.
But as a
stock, you don't get many people.
Don't see business in is the spin-off. What? I can't remember where it was from. Halion.
Oh yeah.
Yeah. A buy recommendation with a price target of 506, with Berenberg 460.
Right.
And that's one that's been trading 370 to 410 roughly range.
Okay. Well, they are believers. Yeah, four quid.
Yeah.
Yeah. Good.
See where that one goes.
Right.
As well, but slightly quiet.
Monkey Man talking about Tesla there. Yes, it did get under 330 yesterday. Not looking good there. And look, Elon's not hanging back. He is going tilt head on with Trump. The guy's looking for a fight. And usually, if you go looking for a fight with Trump, you get one.
What is it that what sparked the fallout? They were.
Oh, he's completely right.
They were boys, right?
That is one thing that he is absolutely right in. The spending is a disgusting abomination. Mm. If you look behind the scenes, there's a lot of things that Elon would have thought that he would have been due to receive, being in such a powerful position, such as his best buddy made head of NASA. Mm-hmm. So that nomination was withdrawn. He tried to get Starlink to be take control of the FAA, the aircraft control, and they said no to that. He wanted his special pass for the White House extended. Mm-hmm. Nope, didn't get that granted. So he kind of has been nudged to the side, really.
Interesting.
Yeah, and then worst of all, in the spending bill, then EV subsidies get cut.
So I guess it's an shakedown in stuff.
Yeah.
Then you wonder how much I guess stuff like SpaceX gets.
Oh, true.
Doesn't get, because they are a lower cost, I believe, and that'll effectively get government money. What you'd have thought.
Yeah.
Right,
7:54. Time for a quick break, and we'll see you shortly. We'll tell what that is. Let's get the chart back up there. Guess the stock. Now, I still think it's JD Sports, and he's telling me it's not JD.
I think it looks a lot.
Sports. Right, come on, team. What have you got? What are you thinking there? Has anybody got that? What? It's had 2 warnings by the looks. It dropped from 160 last October. It then dropped from 120 to 80 pence, bottomed at 60.
That is JD.
Is it an insure? Are we certain it's not JD Sports, Cam? It is. Oh, it's not. No.
you can't categorize it. It's definitely not.
Well, that's for team. Is laughing in his DLR train.
81 pence.
1p. Like 45 seconds. Oh no, it's no. It's British there. Well, the Welshie was saying Nike, and I was like, oh, it's not Nike, is it? But no, it's not. It's British.
No, similar stock movement though. But yeah, no.
What has 81 pence? It's not Lloyd's.
Nope.
It's not ITV. Is it ITV? Nope, it's not ITV. We're gonna. He's got us this time. We won't give you the answer. We'll keep you guessing. See if anybody comes up. Right. Go to the. It's Aston Martin. It's bloody Aston Martin. 8 o'clock. Sir.
There we go.
Aston bloody Martin. Well done, Phil. Well done, Phil. He's nailed. That's a good one. That was. Thank you for the clue. Right, let's see what is kicking off this morning then. Pete Ward, I want you to give the people this in your best impression of somebody who's just got back from holiday.
Yeah, not too sure what you want from me here. We've got WPP at the bottom here, 4.58% down.
With the dividend?
With the dividend, yeah. Vodafone with the dividend. 2p come off there, hasn't there? And they were 6 yesterday, so they're trading just under, I think.
Yeah.
And then, yeah, you've got BP, Imperials, Whitbread, Rolls-Royce all off a little bit. But at the top of the charts, you actually Anglos are up there, Antofagasta, Reckitt's, you mentioned earlier.
Yeah, Reckitt's
bucking the trend there with their like
it's a smooth glide up to £50 and 60.
Yeah, a safe stock. Should we leave it there?
There's more. We should probably leave it there. Antofagasta up 1%. Glencore up 75 basis points. Rio's up up 60. Pete, the consumer of extra small. Take us through the rest.
Right. Well, I mean, what we got here, there's nothing really that exciting, is there, on there? Have you got Mighty on there?
Mitty.
Yeah, let's have a look at those. Mitty, sorry.
M-I-T-T-I-E, is that right?
Yeah.
Down 2% at this moment, but it is spread.
Okay, fine. And then let's see where CMC have come in, since we mentioned them. Indicating off 12%. So, yeah. 249.50 indicated. I guess, so yeah, whilst those numbers year on year, they were below the expected, which is, as we know, with all results, whenever they're coming out, it's not necessarily year on year, it's what the market expects them to do and what they basically said that they would put out to do. So, yeah, small potential there. But let's see it in auction, and we'll be for another 3 months.
Numbers from Doc Martens as well. Full year revenue 787 million, pre-tax profit of 8.8. Seeing return to growth in 26. So that one down at 60p.
Yep. So they're trading 59.50 at 85. I think they've upped their dividend as well, maybe.
Right. What about in Europe? Any big moves in the Eurozone ahead of that rate cut today? 1:15 p.m., you're going to see interest rates drop to 2%, where their inflation number is as well. So real rates.
2.15 is the expectation. But yeah, there or thereabouts.
The deposit rate, yeah.
And then I think the big one Guard says after, like things, it's to do with the commentary that comes after, more so than, and that'll be one followed by the statement. So plenty going on around 1:15. So you've got jobless claims out of the US as well.
Oh yeah, 1:30 is a big one
ahead of
today.
the non-farms. So yeah, keep your eyes on that.
If you are looking at European stocks, up 3.5% is your buyer, and ASML up 1.660.
They got upgraded a day or two ago.
Oh, did they?
It was Barclays, yeah. ASML is an interesting one, isn't it? Because everyone says the whole AI sort of space can't really function without the specific chip
what they
make, and yet it still seems to struggle to break here. And I don't know why. I don't know what is holding that back.
Let's have a look at that chart, because you're exactly right. And every time it drops, then you know there is some temptation, I must admit, around that 600 level.
Yeah.
But yeah, look at that, 520. That's maybe one for selling options of.
Yeah, I mean, it's the one that I always see, and it seems like any shred of bad news, it gets hammered.
Yeah.
And there's a bit of a rally. It slowly creeps back up to about here, and then it doesn't kick on.
I thought NVIDIA numbers have given it a bit more of a...
Yeah, exactly right.
Yeah, but go European stock, you know, the laggards. Yeah, so 660 there. And then the losers in Europe are Elon, Lufthansa, Air France, and Ryanair. So the airline's getting a bit of a cuffing there, with Airbus down 90 basis points. Right, I'm going to take a quick look at commodities there as well. Pete, hard at work. Look at this man. Everybody that is serviced by this man. Now where? Oh yeah, we haven't looked at Smarter Web yet. Where's this one opened?
86.87.
86 to 87.
What's your thoughts?
Might go to a break. Really? I mean, it was a big dilution.
I don't know.
Yeah, you crack on a minute there, Pete.
It's a crazy one, but yeah, let's see where we go. So what else have we got now?
Do you want to go through the old commods there? Here we go.
You're pulling them up.
Oh, come on. There we go.
Okay, yeah. So what have we got here? Nothing too crazy going on. I mean, gold is the interesting one with this sort of range of what, 3150 to around here, really. And I think the numbers today and tomorrow will be pivotal for that to see whether we push higher.
That could actually, that's worth a look at the options market. So in 10 minutes time, we'll have a look at the gold options market for the week, because I think you're absolutely right. That is pivotal.
Yeah, and then oil, I mean, to say that is one of the most volatile commodities that we have, it has been kind of worryingly quiet for a while on that. But yeah, there's nothing to really explain too much there. Everything's kind of pretty much where we left it, right?
Yeah.
But yeah, gold is the one that people are keeping their eyes on ahead of non-farms and rate decisions and all the rest of it. And it's one that's holding up very, very well. And it'd be interesting to see it make that ascent up to fourth, which is, you know, I think the start of the year is one where I think it might be Goldman's that put it up there.
Oh, we're just getting in my ear. CMC are open, and they're not opening well. Down 15% this CMC. Look at that. 240. Said that, Pete, that's only back to where it was at the start of May. So That is...
Yeah, I mean, it's been a wild ride on there. I mean, it was, it was like 80 pence, and then it all of a sudden went in a straight line pretty much, non-stop to 330, 340. And then we were back above below £2 again not long ago. So, well, yeah, where's that April? Yeah, I mean, like everything at the start of April, it all hit, but there was a good trade to be had in most of the brokers, I suppose. Whether it was Hood, whether it was Coin, Schwab, whoever, they all have done pretty well on the back of the volatility that we saw in April, as you'd expect.
You just reminded me to have a look at Lloyd's 76. So it's trying to get to that 80p level, isn't it? And so it's 70. It stumbles. We probably need a new catalyst there.
Yeah, I mean, they were shaking off the stuff from the motor Close Brothers, and I think it's kind of turning to form now. I do think it will probably touch 85, 90 by the back end of this year, all being well, big dividend. And it's becoming more and more.
Yielders in the FTSE.
Yeah.
Let's get an update of that, because I haven't looked at that for a while.
Yeah, I mean, you can. Are you familiar with the stock screener on the platform?
Whoa, now we're talking. Right, that's exactly what we'll do then. 8:15, we're going to have a look at the old stock screener. Before then, with Wiz down 10%, with let's break before we go into
the next section. Dividend yields.
I'll give you a clue.
Running.
Yeah.
Yours, mine. Running markets. Fast market.
Yes.
It's been a while. You told me to do it like I've been on holiday.
Yeah.
Bring me shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling across 7,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you take your positions with less money up front. So this increases your profits on your trades, but also remember your losses are amplified. Manage your risk. With us, you're not alone. You're part of a wide group of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Trade live from 7 a.m. on our brand new YouTube channel, Trade Live with IG.
As well as the live show on our new YouTube, you will find our beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, trading and psychology of markets.
Don't forget to hit those like and subscribe buttons for more exclusive trading content.
Tasty Live's godfather, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Markets, let's likes and subscribes in. So if you're watching and you're not subscribed, 50% of people that watch are not subscribed.
And that means you can't comment, right? And you can't put anything in the chat.
Well, I think that's true, yeah. So join the party, come and join the party, hit the subscribe button. We've got 800. We got to get, what, producer Phil say 900 before the end of the week.
1,000, come on, let's be bullish. Let's go.
We're trying to get...
If there's 50% on there that aren't,
yeah,
hit the button and we're done.
Exactly.
Yeah.
So hit that button, hit the like as well. That would be fantastic. But we are going on to talk.
Come on, pump those up. Get those up.
What a show! What a movie.
So,
right, we're talking about it's Thursday, so we're talking about dividends, right? And dividends in the United Kingdom. Look at these beauties you can get. So,
just to, I think what you should first do here, just extrapolate the side bit first.
Extrapolate the side.
So bring out, the definer on the left side, just so that people at home can understand how to find this. So
there we go.
On the left, you see at the bottom there, you've got that. If you bring that out, that's it. Yeah. So show the icons, right? So you'll see there, you've got stock screener, fairly new piece of kit that we've put into the platform. You click on that, and now you can bring it smaller again and show where you were.
And then it brings up this menu.
It brings up this, and this is something that basically they've been working on for a while. It used to live on the homepage, so it wasn't in the dealing platform. And as we know, the majority of clients just go onto the site and log straight in, right?
Yeah.
So they miss all the stuff that's in the homepage. So we're trying to embed as much of it as we can in here. The stock screener is a fantastic tool in that it gives you the ability to filter and search for. So touching on what we were talking about earlier, which is UK investment, UK foreign capital flying in, maybe because of the dividend yielding stocks, right?
Yeah.
So
nice.
You can go straight up to here and go dividend yield, put maybe high as well, or just do very high for now.
Yeah, let's stick very high.
So that then filters anything bigger than 5% as a dividend yield, which is attractive. Then the region, you'll see there at the top left, and you can just change that to simply just showing the United Kingdom. And then once you've got that, you can then obviously order your columns. What I would do is what you've done there, market cap first, so biggest to smallest.
Yeah, that gets rid of the...
It filters out the stuff that, yeah, it might have a huge divvy, but it's also maybe a train wreck for stock. HSBC, lovely, nice big stock.
Yeah.
And then you go across there, right, dividend yield, 5.8%. And so you go, right, okay, I'm trying to build a war chest in my ISA or in my SIP or whatever that's going to just pay me a dividend. And they're going to be fairly stable, hopefully get some growth in the stock, but if not, I'm getting paid to hold it. To look, and not only do you get that, you also target recommendations, you get the PE ratios, you can filter by sector, so if you just want financials, you can do that, if you just want defensive, you can do that, etc., etc. Obviously, Monday about the defense spending and the boost that we've seen in BAE. The stuff you can build yourself, excuse the pun, a war chest of that stuff, and go, right, okay, yeah, I'll have this as my little thing with this, and it's paying me a dividend, and it's all done for you. So really good piece of.
This is real traditional fundamental investing, right? And this is how I was brought up. A lot of people our age were taught to look at stocks.
Yeah.
Right. We had an explosion, and everything's been incredible. But when it comes down to your ISA, your SIP, and long-term investing, then this stuff's really important, isn't it? Because you want to be in those stocks that have got. Yeah, there we go. Just a question in the chat there. So
that was good.
Vodafone is Vodafone dividends paid twice a year.
Yeah, and it's also 2 cents, not 2% today. 2 cents.
2
euro cents, or 2.2 euro cents, which I think pretty much
2p.
2p over 70 stock, but it's paid twice. Add it together, and then you get what the percentage dividend yield is. There's the question that was in the chat there.
That's right.
So yeah, like you say, traditional investing, so more longer term trades. Although to be fair, tax treatment on the dividend in spread bet is attractive, in that you receive all of it. So worth being aware of that as well.
You get it all.
Well, I mean, it's a frank dividend, so you're paying at source, but then you get the remainder. So interesting. All of our products basically offer, but if you were trying to build a long-term portfolio and you wanted something that's going to pay you, and then obviously you can compound that. So
how about
this is where you want to start?
Let's start to look at these headlines, decisions there, right? So price target upside, we'll say, well, definitely upside 20%, upside 5 to 10. What we don't want is stocks that have got downside. Then we look at consensus, strong buy, moderate buy. Shall we let the holds?
No.
Okay, let's not. No.
We're here to make decisions this morning.
Investor sentiment, I don't really care about that quite as much. And yeah, that's probably about it, really.
You could do the smart score as well. That's a roundup of
yes.
ranks, which gives you a nice an enhanced filtering of even more stuff. So media buzz, social media stuff, all that jazz. Pop that in there. Go 10, 8, and 8.9. Fine, right. So now you've got the cream of the crop.
And look at those smart scores as well. 10s, 8, 9, 9. Like my performances.
What? Strictly Come Dancing?
Yeah. 7.
Certainly not your dating show performance.
Oh, days. He's just too romantic. To be shopped on international television.
Oh, well.
He's just too romantic.
He just didn't understand you.
Yeah.
Literally.
Yeah. Well, I was very Scottish. Right. So, and what shall we still do by market cap?
Sure.
Taking out a lot of the options.
Yeah.
Maybe we've gone a little bit too particular there.
But Rio's, that's one that you talk and whatnot.
Yeah.
It's just an interesting way to do it. I mean, you could do it in any region. You could build. You could, if you wanted to do the whole emerging markets or that we were talking about earlier, you could do that.
Shall we add Germany?
Sure. Yep.
Let's add in Germany there, and France as well. Take our French friends. Okay, so there we go. So Rio Tinto, Daimler Trucks, Imperial Brands, Vodafone. Look at that up there. Admiral, Sonic, Fleur. As we go further down, then Mutares. I wouldn't touch that one.
What would be really if you could say, right, I want to purchase 100 grams worth of this stuff and split it, and you hit a button and it just goes whoosh, and it makes that noise.
That would be great, wouldn't it?
Yeah. I'm an ideas man, Rich.
Or that's when you sell it. Yeah. So that's a really interesting platform. As a reminder, it's down here in the bottom left-hand corner. That is the stock screener. Boom. And that's how it comes up. And it remembers your selections as well. Excellent.
Yeah, that's it. And you can just reset and start.
Interesting. Was our stock of the day yesterday on the chart of the day. And we hadn't realized how much it had actually fallen. So shall we just take a little look at Rio's there? Add that to the workspace. Yeah, this one has really come off the boil. So There's my chart, but that's from a
It's
long
halfway
time
back
ago.
down to where it got down to in April, right? It's halfway back down to where it got down to in April, right? What's been the driver there? Do you know?
CEO left
Okay.
very abruptly, and I don't think there's been any sort of more reason given. But have a look at iron ore. So remember the shape of that chart. Yeah, there's your answer. 70% revenues are up, and there it is. If I bring that into the last couple of months, you just see iron ore price coming off the boil. Right, so that makes me step back a little bit, because your dividend with Rios is dependent on this, because that's your big cash cow for Rio revenues.
So you think maybe it's coming off on the fact that potentially they'll have to trim dividend?
What I would watch was any positive news coming through in iron ore. If suddenly this popped up 4% one day because of China stimulus, China industrial production is going up, or a nice trade deal, then Rios would be my first purchase.
Okay. We'll watch this then.
Yeah, definitely. Right, anything else you'd like to look at, Pete Ward?
No, not so much. What in terms of platform bits and pieces? There's nothing.
Or stocks?
Stocks. Let's have a look at our old friend Nike, shall we?
Oh, good old Nike, yeah.
Because I've been kind of waiting for it to buck the trend, and it's put its head back above $60.
Yes, it has.
But it is still unloved compared to where it was. And they've still yet to really come out with anything that's brand new or edgy, I guess.
There's the long-term chart on that one. You've made me put this blooming thing up. Such a waste of space that when it's open.
Yeah, it is, but if you don't know what's there, you've got to know, right?
Yeah.
Once you become a robot like yourself, you can you understand what they mean. But yeah, but the good thing about the platform is you can, if you do run a couple of screens at home, you can pull your workspace in the browser and have it on.
Nice.
Etc. So you can sort of.
You got it at home?
3. So laptop and 2 monitors.
Wow.
Yeah.
And do you allow
Same
drinks?
as here.
Do you allow drinks at your computer? Because I've always been told no cups of tea or.
Yeah, very much so. Yeah, I can't function without them.
Really?
Yeah.
So you will have.
I'm not as bad as Phil, the tea addict, but yeah, I like to have. I'm a bit more of a coffee man.
But you're happy to have it table in front of you.
Yeah, I can not knock it over for a day.
Well, that's fine. You have walked right into that one.
Yeah, it's brilliant.
Yeah. Pete Ward mentioned me.
That's a very good.
I'm not.
That's very good. Yeah.
Pete Ward messaged me from holiday. White t-shirt, shorts.
No, off blue t-shirt with white shorts. I'm not the snowman. I wouldn't wear a white t-shirt with white shorts.
Shows off the tan.
Yeah, well, yeah. It's last night, isn't it?
Pete messaged me one night. Oh, you'll never guess what I've just done. A whole glass of red wine all over the white shorts.
All over the white shorts. Yeah, I was picking up my daughter's like little rucksack with some of her toys in, brought it up to the table, and then just clipped the edge of the red, cascaded down towards me, and just looked like I've been shot.
Brand new shorts for the holiday?
Shorts and t-shirt, yeah, both ended up in the bin.
No.
Yeah, fortunately, they're only from Next, so it's all good.
Okay.
Cheap and cheerful.
Properly.
Smart holiday buying. But yeah, no, you're right. Yeah, the comment of I'm not a child, well, but I was fairly long wine, so.
Good stuff. Right. Welshie saying had a meeting this week. CEO was wearing Cordis. Nice.
Nice.
Very nice. Buy that. Invest in that company.
Yeah. Our mutual friend Jamie, he's a big Nike man.
Yeah.
In terms of the shit, all pair of the.
And tomorrow.
Oh yeah.
Yeah.
Oh, you
First game.
saw another client of mine. That.
Yeah.
Yeah. You playing a lot now?
Yeah. Trying to. Good.
Well, you keep practicing, son. You'll get there. You played Phil yet?
No, but I'm not ready for that.
Okay, fair enough.
So if we go on to my my performances so far, I've had about 5 games, and they are loss, 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 loss.
that the paddle record or the trading history?
The
Now we're going.
now that coffee just kicked.
Stop asking me about the market. Let's just talk about spilling drinks.
Yeah. So yeah, playing paddle with Jamie tomorrow. But he is a big fan of Nike. That's right. And it's interesting. It's still.
I know you're a believer of like 6 to 12 months on this. You've got to just be patient, and you know, it's whether or not you park the bus up now or you just wait.
I'm happy to sell puts in size here because below 60, and I'm short the puts, the 65s and the 67.5s. But at the same time, I'm short the 67.5 calls as well because I don't think it's suddenly going to higher. I think the that you see this thing really start to move will be summer, October, November, December. So the set of results that are around that time period, that's when I think it starts to get interesting. So I'm long for calls for the 77 level. So I think, I think that's the, if the market holds.
Yeah. Which percentage-wise is pretty, it's like nearly 30% move from here.
Decent. Yeah. Arthur Fox Haig asking, what WC's current multiple of actual cash and mark-to-market BTC assets? So I haven't looked into it that closely with the cash and the BTC. All I've done is taken how much he has raised so far, which is 26 million sterling. Taking that 26 million sterling, the current share price, which is 85 pence. Or does it give a market cap?
There's 150 this morning.
Yeah, but it's new because he's now.
Maybe it might give me one. Hang on, let me see. I don't know if it's going to be up to date. 1 second.
So
market cap. Doesn't give me it.
Well, we know how
there's Aquis. I don't get as much from the L2 screen. I don't get cumulative volume. I don't get.
That's all right. There's 204 million shares times 83 million. So the market cap is 173 million. We then divide that by the amount that he's, or his value, which is 26 million, and it's on a 6.67 multiple of NAV, having been as high as 10 at one stage. And now it's 6.66.
And they've got about $12.7 million of Bitcoin.
Yeah, that's right. So there was a Bitcoin this morning as well that he bought 34.
Yeah. Well, 39.52 Bitcoins. Average price of 109.67 in dollars, 77,700, making £3 million purchase.
Yep.
From the 8 million rate, from the 30 million rate, still got 10 million cash, still got more to buy, etc., etc. But in theory, 122.76 total Bitcoin holdings. So call it 1, 2, 3.
So 123 Bitcoin.
Yeah. So roughly
in
12
5 weeks.
Yeah.
And the raises have gone 1 million in the IPO, 2.2 million in the next round, 3.4 million in the next round, 6.8 million, 13.4 million. So you can see how the raises are getting bigger, and the share price has gone up of pence, but then the dilution, the multiple to NAV starts now only a 6.7 times multiple.
Yeah, what we found last time when it got below the 10 times multiple, and then by a step in, it was cheaper.
So then let's say in theory he raised the same amount again, right, in a few weeks' time. That would be done at a 6.7 times multiple. So the dilution would be 100 million market cap, and if he raised 13.4 million again, the dilution's 6%, 7%. So then you add 7% to the number of shares, which would make it 220 shares.
Roughly.
that you would then have 40 million sterling. So 40 million sterling on a 6 times multiple
240.
Is 240, and you'd have 240 million market cap divided by 220 million shares is £1 and
£1.10.
£1.08. So £1.08.
All of this is, you know, it's all interesting and it's all math. But what happens if Bitcoin comes down?
And if Bitcoin goes down, that's the other thing.
Since this has been dipped above 100,000 and touched the all-time high, I mean, it's been phenomenal timing. So that's the biggest. Obviously, when we've seen in the past, strategy, MicroStrategy, etc. When this, you know, Bitcoin tanked, that, you know, it dropped pretty hard.
Yeah.
So yeah, I think caution.
Oh, absolutely. Oh, yeah. I mean, this, you know, this is
the theory works, you know, in terms of the accretive purchasing and increasing Bitcoin per share, you equity, and not diluting and diluting a bit, but then getting more of a movement in the actual underlying and the size of what you've got. That all works when you're going up the stairs. Yeah. So just what happens if it, so it comes down the stairs?
So the big risks are a contraction in the multiple of NNAV, which means that belief to alter. That's why that would come down. The price of Bitcoin itself, but then I guess he's doing that at a gradual. He's getting the cash and going all in.
Smooth curve of investment grip continue, which is at the end of the year, right? We've got much now, and our average price is whatever. So yeah, no, interesting.
Julian saying it will end in tears.
Love it. Love the optimism.
Whose tears? The ones that are involved or the ones that aren't?
Oh, that's it. Is it the FOMO? Is it the people on the sidelines going, 50? Actually, I mean, no one wanted to buy that thing at $200.
Oh, I mean, I didn't understand any of this until I watched 2 hours of a podcast on strategy was actually doing. And we talked about it yesterday. Really good interview with Imran yesterday on strategy and the convergence. So well worth a watch. We'll put it on YouTube today, hopefully.
Yeah. There is actually, I found a short video of just a bloke talking to his computer, 10 minutes, explaining it in a quite nice way, which is worth a look.
Great. Pete Ward, thank you very much. It's been wonderful to have you back.
Thank you for having me.
You on next week?
Not as it stands, but you never know. Watch this space.
Come on. Step up. Great. Next, we've got Angeline. She's going to be talking crypto. That's right, decoding crypto in our first of a new section. If you're interested in crypto, give us a follow, give us a subscribe, give us a like. And if you aren't, go have a cup of tea.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the shiny new thing. Bring me the next.
You're looking for flexible ways to trade financial markets. Whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 1,000 markets. So if you're up, you buy. If you think it's going to go down, you sell. When trading, trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are amplified. So be sure to manage your risk. With us, you're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
tastylive's godfather of options, Tom Sosnoff, passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moving the market. Fun trading stuff. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey trader friends, welcome back. We are talking crypto today with Ryan Grace, the head of Tasty Crypto Otago. He joins us right now to talk about this on a day when we have this brand new product. I'm sure you've heard all about it already. How's it going?
Angeline, I'm doing well. Thank you very much for having me. And it is an exciting day. We've got spot crypto launching in the UK. What else could you hope for?
I know, right? I'm just bunging this on for your friends so you can have a look here. But there you go. You can find this online, everything you need to know. Prior to this, it was only open to Pro. But now, you know, anyone can take advantage of this and you can trade with us on the platform. So this is something that you are already au fait with, Ryan, because you guys have had it over your side for some time. I guess our traders are more used to, you know, spread betting CFDs, and they want a bit of handhold. Often get asked by some that are unfamiliar to this space, you know, what is, you know, give us the very sort of filtered, you know, easy to understand version of this, because, you know, to someone who's relatively new to this space.
Yeah, absolutely. So to take a step back, crypto really is this catch-all term that's used to describe everything from blockchain technology, distributed ledgers, tokens, cryptocurrencies. So that fits into the box. But the way to think about crypto is very simple. Crypto is a technology. And what is this technology? It's internet money. And what do I mean by that? It's a way to transfer value network. It's permissionless. I don't need to go and ask the bank, can I do this? I can connect to the internet and I can transfer value across this network via technology, which is how it works, and cryptocurrency or tokens. That's the value transfer mechanism. So we can get into all of that. But again, it's very easy. It's very simple to think about. It's a technology.
That's right. And I'm just going to whack up the platform just very show you our offering at the moment. It will be, this is amazing because, you know, we've done this at speed and built it out for our clients here who have been asking for this for you know, a long while. I hold Bitcoin and Ethereum, and what I tend to say to people is it's a bit like an online game token, right?
Yeah, I think so to some extent. There are so many different cryptocurrencies, and you know, in some cases, you have which maybe there's a community behind, but maybe people just think it's fun. It isn't intrinsically worth it. On the other side, you have which the analog tends to be digital gold, and it's pretty telling. I think there's an argument, at least, that it certainly is digital gold, and therefore it has intrinsic value in that, well, you can transfer value, or it is a mechanism for doing so, across the network. So you have a couple different, you have a lot of utility that can be gained from some tokens. You have others that arguably maybe don't have that intrinsic value. Like, so you need to understand and learn a little bit about all of the different tokens. But I think the best place to probably, you've mentioned, you've got Bitcoin and Ethereum in your portfolio. Bitcoin is the largest token or cryptocurrency by market cap. I believe Ethereum is second or close to it. So I would probably start with the larger market cap tokens, but you really want to learn about all of these because they're very different in the same way that when I go to the stock market, I want to trade shares. Well, they're all different companies.
They all have different functions, different backgrounds, different ways of understanding that market and asset class. I often get asked, the whole crypto market, is it down to supply? Is that what is, holding the price up? There will only be, for example, 21 million, reportedly 21 million Bitcoins. So it's, designed to be rare. Give us your thoughts on this.
Yeah, absolutely. So if we just stick with Bitcoin, is the element to it, and that's probably where that direct relationship or that analogy between digital gold or Bitcoin and gold comes from. Why we call it digital gold. There's only going to be 21 million. I believe 19 million or so have already been mined, and it's very likely from the early days that a couple of million Bitcoin are recoverable. They've been lost. There is some risk with how you store cryptocurrency, and when you go all the way back to when this came to life, really back in 2009, 2010, you have the Bitcoin pizza story. People didn't know what this was, but it was, and so you have people that have crypto on hard drives or Bitcoin on hard drives that have been lost. So all of that said, that is one of the primary reasons that I think people are interested in it. But you have to ask, why is that interesting? Well, that's only really valuable or in a world where you want to invest in assets. Why you'd want to invest in hard assets is because you're seeing the debasement of fiat currency, right? We know how indebted the U.S. and many nations around the world are. We know that we have slowing population growth, in some cases slowing activity, and have so much debt against that we constantly have to, when you look at the central banks, you look at government spending money, you kind of have to stimulate. And that monetary stimulus is debasement of the currency. And so we've talked about inflation, you look at CPI, you look at consumer inflation, but really it's more about the debasement of your purchasing power. And when you look at something like Bitcoin, it's very compelling because of that. And when you look at what drives this asset on the margin, it tends to be global liquidity, financial conditions. It tends to be some bank balance sheets, right? There's a pretty strong correlation between the expansion or contraction of the Federal Reserve's balance sheet here in the U.S. and the price of Bitcoin. There are also some charts that you can point to with global M on about a 90-day lag basis. Everyone can find this on X. We'll share this around. But on a 90-day basis, on a lag, there's almost a 0.95 correlation between the price of Bitcoin and what we see in terms of global M2. So when there's more liquidity in the system, there's more credit in the system, and we continuously stimulate this broader global financial, there's really then a case to be made for hard assets, and Bitcoin, given its scarcity, like gold, is considered a hard asset.
We're also seeing uncertainty drive this, right? Each time, markets saw, as you saw in April, and to a certain extent early May as well, and this sort of erosion of trust in fiat currencies, that tends to also support Bitcoin.
Yeah, absolutely. And I think it gets back to the point that we know if there's enough volatility in the system, or if things get bad, the monetary authorities tend to step in. I'll use the Federal Reserve as an example. I'm hearing this, but there is the Powell put. There is the idea in the market that if you have a large enough drawdown, Trump tweets enough, there's a volatility that's sustained for, will be more aggressive in cutting interest rates, and ultimately we will be back to expand through open market purchases. And that tends to drive all asset prices. It relates to asset price inflation. And when you look at the returns of Bitcoin and how volatile it has been, it's been a pretty good trade. It's been a decent performing asset, one of the really the best assets over the last decade. And until that isn't true, That's something that people believe in the market. It's reflexive in nature, and I think that's one of the things that we do see. Now, it doesn't mean that crypto prices, when you think of them as risk assets, aren't going to be immune to short-term volatility. We've certainly seen that. We go back to some of the tariff announcements here out of the US, had a lot of volatility in April. Bitcoin had a significant drawdown as well, went down to 75,000,
Yeah.
has since bounced. But I think those that in this environment, you look to really take advantage of.
Just whacking out my chart here, back up above the 4,000 level, as you pointed out. It has had extreme, volatility, but it is, at levels, most people imagined even, 10 years ago. It's quite incredible. Lots of people also watching us asking, how does crypto work? I mean, for example, I've got a wallet. How would you explain to someone who doesn't have a digital wallet?
Yeah, I think the easiest way, without getting into the weeds on the technical complexity, how wallets work, you have a private key, a public key. In some cases, you're in control of that. In other cases, it's held on the exchange. I can dig into all of that, but the way this all works is through a distributed ledger. So when you think about a blockchain network, it's a bunch of computers, a bunch of nodes. So decentralized computer network, it's all running the same code. The easier way to think about that, or like, what does that mean, is really that it's a spread in the cloud. All of the nodes on the network have the same version updated in real time, and it's cryptographically secured. So there's all the fun crypto details, but they all have the same version of the spreadsheet. And so that in itself is what powers cryptocurrency. Cryptocurrency is then an application of the. So we have blockchain technology, we have this network, distributed compute, and then a very compelling use case of the technology tends to be the ability then to transfer value on that network or to move it across the ledger. How do you do that? We do that with a token, do that with currency. So Bitcoin is a cryptocurrency. Bitcoin, when we talk about it this way, we tend to use a capital B, but Bitcoin with a capital B is the technology. It's the blockchain network. Bitcoin, lowercase quite often, is the cryptocurrency. It's the native token to the chain network, and it's how that value is actually transferred. Now, we price it in fiat currency, so as humans, it has value to us, but as the computers talk to one another and verify transactions, this is the currency. It's what they pay each other in order to validate these transactions with. I don't know if that's everything you're looking for around how it works, but I think because this is so complicated, sometimes it's easier just kind of high-level concepts. But again, I think about it as a spreadsheet in the cloud, and the cryptocurrency is how you move value around that spreadsheet, one column to another.
And you've explained it beautifully because it can get quite complex, right? And so last but not least, before I bought my first, crypto, I was told you have to know, and one thing, the key takeaway is no key, no coin. There are many keys, many wallets that you mentioned earlier out there. Which ones do you like? Which ones do you use? Just give us a quick summary.
Yeah, so no key, no, or not your keys, not your coins. It's to the fact that if you have the private key to a cryptocurrency, because this is a distributed database on the internet, if you have that key, then you are technically in control of that asset. Anything that's held at that wallet address, you can move it, you can transfer it, you can sign transactions, you can do things with it. Why this matters is because if you go back in the history of Bitcoin, you've had exchange act. Most recently, you had the largest exchange in the world a couple of years ago in 2022. Well, we found out it was a fraud. Doing, I should say, fraudulent things with the crypto. Anyone that holds their crypto on an exchange, and it's not right or wrong, it's just the objective truth here, but that exchange does have the ability control of that crypto. And so in the case of FTX, they were using the customer's assets. hold your crypto on an exchange, Coin, for example, or Binance, you're not technically the owner of the crypto. Also true about your money in the bank. It's just that we trust in these institutions versus this relatively new technology, or we trust in them more so. So when you hold your key via a self-custody wallet application, and my favorite happens to be Tasty Crypto, but there's many others that are out there. When you hold your key, you are the only one that's in control of that crypto. And you can think about it like this. If we go back to the example, bank, you have your money in the bank is going to lend that out. We have a fractional reserve system. You're not technically in control of your money. There is a chance there's a bank run. There is a chance that when you go to the bank,
There was one here in the UK not too long ago. And
Yes.
yeah, that's right. So it's
we do trust.
Yes.
We do trust that the will make everyone whole, or the Federal Reserve will make everyone whole. We have historical precedent of that to an extent. In crypto, well, there really is no other counterparty. So you're either in control or you're not. But when you think about the self-custody wallet, again, that would be similar, in my opinion, to, it's not right or wrong, the money in the bank, you have some money in a safe at your one that has safe. That's the self-custody or non-custodial wallet. The custodial or custody side of it is where it's held with the exchange. That's there's some nuance here, but those are the differences in terms of how you store your crypto.
Thank you very much. We are very, very have you with us and explaining that so gracefully. Ryan Grace, head of Tasty Crypto. For more on this, do hit the subscribe and like button. Of course, you know, crypto is a risky product, so do make sure your guardrails are in place to make sure that you know what you're doing. You have your keys in place as well. But do hit the like and subscribe button if you want to see in this series with myself and Ryan.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. We wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, kind of wallpapery, and I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very what they're doing.
So my work is colorful, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space on slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Tasty Live's godfather of options, Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop of live trading. Fun, challenging and the market. Doors open at 5, with trading starting at 6. Have a pint or glass of vino with the boys. Free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, 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 welcome back, trader friends. I was wearing black earlier, but I'm now wearing white. See the amount of quick changeover here for our special clients. And we are 2 minutes away from the... We are counting down to that at the moment. Let's just get you across some of the indices and how they're looking at precisely 8:58. We've got, it looks like risk on this morning. Wall Street, US Tech 100, marginally higher there. Germany 40 also up 0.3%. And also we're seeing the CAC 40, or rather the France 40, up 0.33% as well. FTSE up just a touch, but now edging towards that neutral territory. We've got plenty more to go. Let's have at the side of things as well. Just down 1 more minute to go. And we are just taking a look at that for you because the dollar versus the yen, I can tell you, that is an interesting one to look at because we are now starting to see it head into the cloud there. It had been previously rejected, the cloud prior to this. Are we there yet, gallery? Are we there yet? 30 seconds to get watch list up. Trader friends in readiness, and Monkey Man, I will look at BTC for you right after this, but having a look at the all sessions there. Well, here we go. Early in 8, 7, 6, 5, 4, 3, 2. One. Here we go. And we are off to this there for you on the winners list because we got Nova Nordisk up 1.2% all session. HP as well as HP Inc. rather up 8%, and Virgin Galactic all sessions also heading higher. We're seeing names there as well. Moderna, my favorite ticker of all time, RNA is the ticker, up 0.33%, and Pfizer also riding higher there. Let's have a look at the losers list now that they're shaking out. We've got Beyond Meat there, all sessions down, ouch, down more than 3% there. Any of you eat Beyond Meat products out? Tried them, but they have a strange texture, and I can tell that it is not actually what it's meant to be. Neo down 1.6% there, and Peloton Interactive also down 0.4%. That one continues to. And now the company is trying to lease out its old bicycles as well. Tesla, just taking a look at that one because we have seen this move quite a bit in the last session, down 0.75%. Adding that to my workspace for you, getting rid of that pair trade that we did earlier in the year with BYD. But it is down almost 1% there on almost after having quite an interesting Tuesday as well. Just a reminder, trader friends, of what happened in the previous session. We saw a bit of a shakeout. This is the hourly chart here. A bit of a shakeout there on the previous session. And on Mondays as well. Tuesday shakeout there coming after Musk made some negative comments about that big, beautiful bill. Elsewhere, a look at Wizz Air, because many of you have mentioned this. A look at this chart here. Whack up. There we go. Look at that 23% dump there on that stock this session, and that is quite painful. That's on the outlook, and also many of you chiming in earlier about the delays as well that we saw. I'm just going to read that out for you because on our news space, top loser on the FTSE mid cap after the annual profit miss, which fell short of analyst expectations. Full year operating profit, £167.5 million, and the company says it will not provide an outlook for 2026. So on Wizz Air. Are you asking, where is that B Bitcoin? Here we are. Up for you. Exercise. I was out for you because last few days I've noticed you've been a bit late. Now, Bitcoin really interesting here because from a technical viewpoint, to me looks like it doesn't really know where it wants to go yet. It is in a range, and we continue to hang above that 102 level, which is a level of interest there. Of course, the 105, this is the daily chart for you, the daily chart. It's currently around just under 105. That area is halfway between the psychologically crucial area of 100,000 and also 110,000, right? That previous to this, you know, that was kind of like the key area that everyone was watching. I want to also say, I'm just on for you a moving average, and I'm going to choose an exponential moving average. Actually, I'm just going to choose a moving, well, here we are, we've got exponential there. The 50-day is the blue line there. This currently, we're seeing the price action above that, and also crossing that 20-day. Makes it even more interesting because, you know, this tells me the chart price action has two potential possibilities, right? So I can say, trader friends and monkey, is that just, you know, from what we've seen the last few days, that short-term pullbacks continue to attract viewers. And the reason I can say this is, look at these green candles on the way up the stairs. We often say that go up the stairs and take the lift down, so be careful. But in this, and you see that we're seeing more green candles on the way up than red. So green candles there, more green candles there. So just bear that in mind if you are trading Bitcoin. For more questions, do let me know, and the like and subscribe button, trader friends, the like and subscribe, because, you know, let us know what you'd like us to look at, because, you know, we are here to help the wonderful community, and you know, this is what we're here for. I say earlier, and have a look at Rios. Here we are. Pretty much flat at the moment. I'm going to take off that moving average for now, and I'm going to just make that clean for you so that you can see a bit better. Here we are. And this is the daily chart, trader friends. Taking a look at the moving averages first. So here we are. Let's have a look at bunging up the moving. And on the daily chart, you can see that, whack up my chart, people. Can you see it here? Yeah. The stock is trading at that 4,350 level. Now, this is currently below the 20, it's below the 50-day moving average, and also the 100-day moving average. And this is bearish momentum going forward. It also should highlight to you that, you know, you do need to pull gloves if you're looking at new long positions. Now, there are some ways to play this. If you want to look at a breakout play, if the price is out of the 50 or breaks out of the 20, then with strong volume, might I add, because you should never ever trade technicals in isolation. So what I'm looking out for here is strong volume as well. So I'm circling with my cursor where I would look, right, if there's a breakout. If we see strong volume, then this could mean a trend reversal. and a buying opportunity to perhaps get us back to that 200-day moving average. But it's on the proviso that you have strong volume. Now, it fails to hold support and fall below the 4,000, around the 4,000 level here, and it falls below that, then that is a confirmation of more bearishness ahead. Right, we got Aaron Bright. So, any questions? Lots of keys, and please slam them and hit the like and button too. Stay right there.
Bring me the next thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible financial markets, whether you're experienced or new to trading, you've come to the right place. You speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can from both rising and falling prices across 17,000, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account, join the conversation, and be inspired to make moves.
Trade live with IG from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, trader friends, welcome back with me and Aaron Bright from IG Smart Portfolios. Welcome to the show.
Thank you very much. Good to have you back from Italy.
Oh my goodness, it's it's good to be back, but I do miss the sunshine, and I do miss the good food.
The Aperols.
The Aperols. I didn't actually get to have Aperols, but that's okay. That's okay. Speaking of which, you've been holding the fort, and I came back. First thing I did, bond printout. Not the James Bond, but more exciting than that, it is this one. And we are seeing the longer end starting to creep up again.
We are indeed. And I think there's quite a few reasons for that. I mean, different portfolio managers will give different reasons on the bond market, but I think from my perspective and from what I've discussed with others, there's quite a few at play. I mean, there's certainly the risk of inflation that we've seen from tariffs. Bear in mind the tariff story changes pretty much on a daily or even hourly basis these days. Reprieves with extended delays. But if tariffs do come into force, it's likely to cause inflation through a rising cost of production. So investors are demanding a higher yield, which is understandable when you've got a fixed income paying asset. Also concerns over the sustainability of the US debt. We saw Elon Musk, I think the other day, I think it was a couple of days ago, sort of complaining about the size of the debt repayments the US is undertaking. And obviously they've recently passed this very sort of interesting bill, which
He
is
called it a disgusting abomination.
Yes.
I think were the words.
He doesn't mince his words.
Kill
So
the bill.
yeah, exactly. So it's interesting to see that, you know, with that going up, with the US government increasing spending, you know, their debt burden's obviously going up, and investors will have concerns about their credit rating, their creditability. It's like, you know, lending money to a friend who's now got more and more debt. That's the way to look at it. The concerns of paying it back will, you know, increase a little bit. So that's why investors are demanding a high yield, because they are, in theory, taking on more risk. Really interesting development of the bond market. And it's, you know, something that investors are certainly keeping a close eye on as things develop throughout the year.
Do you think Trump can get away with it as long as stock markets continue to trickle higher? Do you think that's his view?
Well, I think Trump's platform, and the reason why he got elected for many people, was from the business angle, deregulation of certain industries, and, you know, also he wants to sort of empower sort of in certain parts of America which have felt lost. You know, this whole America Great Again rhetoric was on the basis that, you know, jobs have been lost overseas. He wants to bring it back to America. That's obviously his key part of his policy, and as long as he's sort of achieving those goals, and, you know, the macro data is good, and absolutely the stock market, you know, Wall Street has a huge sway in you know, political influence and political power, as we saw with the city with Liz Truss. You know, saw a real tantrum there. So it's certainly a bit of a balancing act, a little bit of a Game of Thrones scenario. Not quite as violent, but you know, there's a lot of stakeholders at play which all need to sort of achieve their goals, really, or that nothing becomes too unsustainable.
What's interesting, I'm glad you brought up that Game of Thrones metaphor. It's, he's got many spiders, hasn't he? He's got many. What are they? Crows? No.
Yeah, are you talking about the spies in Game of Thrones? For Varys? Yeah.
Varys, and he has these
the
birds.
birds.
There you go. Yeah. Everyone mentioning how smart you look today.
Thank you.
Even the producer Phil on the you know, train is saying that no gilets. Gilets got banned here because of that wonderful rustly sound.
Yes.
My gilet got banned too.
Yeah, it's a shame. I mean, I'm a big fan of gilets, but I have to revamp my wardrobe, buy some gilets which don't have such a rustly material on the front. But
it's really hard given it's all parachute.
Yeah, absolutely.
Non-farm payrolls. That's the big thing. Other than Broadcom, for those of you who are trading Avigo. But let's talk about non-farms first, you know, because the report for May looks like it's going to rise by circa 126k to 100. That's the most recent print that I've seen. This is on the money, or above or below expectations? Below the bright expectation.
Yeah, I mean, non-farm payroll is really interesting. You know, we've seen sort of quite contradictory data. Sometimes we've seen slightly weaker data, slightly stronger data. I wouldn't be surprised if it comes up a little bit short this time. We've seen a figure of 177, I think, last month. We're now going to see an alleged figure of 120. It's still not a good sign to see job additions falling down. But yeah, I think the US economy is a really interesting one. We've been in a situation for a couple of years now where people have said recession's imminent. We've had all this warning signs, arms rule tree, inverted 210 spread in the yield curve. We've had all the warning signs where portfolio managers, investment strategists around the world have been sort of bracing themselves for. And yet it's still you know, continues to do quite well, relatively well.
Yeah, which to the point where I think, you know, we haven't seen this end of exceptionalism, but it's more so the the start of diversification, but not the end of US exceptionalism. What do you think of that?
Well, absolutely. I mean, for the past couple of years, you actually, I mean, obviously you always need to be diversified from sort of a portfolio management perspective, but last couple of years you relatively speaking punished because the US produced, the S&P 500 produced 2 years of 20% gains. So you know, or the FTSE and certain segments of the European stock market, with the exception of the DAX emerging market, those areas not perform as well. So in the equity sleeve of your portfolio, you're actually rewarded for not being diversified, which is quite a conundrum for the multi-asset investor who wants to ensure a risk-adjusted return. Yeah, I mean, I certainly think that the exceptionalism struggles this year, but the US economy is probably having, and the US exceptionalism argument is probably having an adjustment, I would say.
Should this, you know, smart portfolio perspective as well, should investors, you know, with their pensions, not dipping out and chop and change, but rather sort of ride it out? We often talk about riding out dips, right? In the longer, you know, longer time frame. But look, FTSE here, and you know, perhaps many of the indices just whacking this up for you. You know, we did see that, you know, that obviously the tantrum back in April, turmoil, and then you know, those that did buy the dip, happy days for them, right? They are now laughing. Look, it's going up.
Those who took Trump's advice, which was you know, a tweet in all caps saying, "Now's a great buying opportunity," which was interesting timing.
And look, Germany having the same sort of bounce there. In fact,
shaped recovery. That's what it's called. Sort of, we saw the same during COVID when you get quite an interview. This one was nowhere near as bad as sort of the 30% corrections we saw in you know, bear markets we saw in COVID, but particularly if you put a large chunk of money in the top. A strong recovery we've seen. It's
very strong. And also this, looking at the DAX here, for those that look at technicals like me, I mean, this looks like if all these green candles here were red, it looks a bit like a J hook. Are you familiar with the J hook?
I'm not, no.
When it looks like a J but a sideways hook, and if these are all red, it shows you that there's been a lot of selling, and then suddenly it hooks up, and you know that the bulls are
back.
Yeah, the party's back on. It goes zoom up that way, and which is kind of, if I try and widen, kind of looks a bit like that. For those of you that like the J hook pattern, please put it in the chat. I'd love to know if you look out for this like me, and also slam the like button if you hit the subscribe button.
Yes, I have.
Oh, good. Saying that you hold Rio because of the dividends. Yes, I do too.
Yes, I actually remember, I think this was 2022 when there was quite a sharp sell-off in equities. To my great uncle, and I think he received a 14% at one point. So I was very chuffed.
Yeah, so here we are. Very decent, 7% there. But time and time again, this is, you know, why we see people, these stocks.
Absolutely, you know, yielding 7% is very attractive, and you know, I guess the only caveat to this argument would be that, you know, if you sort of dabble into the gilt market or some of the bond market, you're getting 4%. You are taking equity-like risk in this. These yields are more when bonds are yielding lower, but still really attractive. You know, and you've got certainly a premium given the fact that you are you know, investing in an equity-like security. Well, an equity actually.
Yeah, and let us know, trader friends, reinvest or you cut the dividend and put it somewhere else, but or do you just straight Mango? Just want to say thank you again if you didn't hear me the other day. But thank you for the gift that you passed to Rich to pass to me here. He and his wife apparently do this 3D printing. It's fantastic, isn't it?
Yeah, that's from a printer.
Unbelievable. It's so well made. But thank you very much. I have it here by the desk, and it keeps me company when Aaron and Rich are not here. Right. Let's have a look at some of the other stocks that our trader friends have asked today about today. Broadcom. Do you like Broadcom?
It's an interesting. You know, said quite a few times on the channel, we don't allocate to specific stocks in our portfolios. We take quite a broad view on the indices level, but you know, stocks like that are obviously very important constituents of the index. And yeah, you know, their performance will obviously aid or damage the smart portfolios depending on which period you're looking at. But yeah, no, certainly an interesting company.
The reason why I ask about Broadcom is because I'm going to try and get to it. Just come off my chart for a second, because we have earnings Broadcom a bit later today, and also what's interesting about Broadcom is its chart. But whilst I'm whacking this up, the other reason why I bring this up as well, I mean, it's very strong upward trajectory there. The reason for this as well is because, you know, Broadcom's gaining, AMD's gaining. We saw strong support from the likes of Hewlett-Packard Enterprise after strong earnings due to AI server demand. Let's check in on NVIDIA as well, because that drives the AI heart, as it were, but also, you know, looking there, just taking out the technicals there, draw for myself. But, you know, it's interesting to see, you know, tech stocks still very much, you know, giving indices the support there. Do you think that we're going to continue to see this going forward in the second half of the year?
Yeah, I mean, I think it really depends on the equity market story in general. You know, these stocks, when there's a change in sentiment, can experience significant volatility. So I think if we get a change in the scenario, or you know, tariffs, we see of sentiment going to market, this might not continue. But if positive sentiment continues, or we get an increase in positive sentiment, yeah, look, this could certainly continue. But also the state of the US is going to continue to come into question, and that will also come into question whether or not tariffs are, you know, cancelled or increased. Who knows what happens to tariffs? It's something which I think is going to be, you know, under every investor's microscope.
Yeah, it's almost as if you know, everyone's kind of on tenterhooks wake up to check to see what's happened overnight, because that's kind of the world we live in now, right?
A post recently, I think it was a story broke, and you know, Trump did the Liberation Day, and it said that they called Joe Biden Sleepy Joe because you could sleep at night with regards to your portfolio. So.
I love the people that come up with these terms, and taco as well.
Yes, Trump always chickens.
S&P 500, just very quickly, you know, around 3%, you know, high seen. Let's wake that up for you, so that it's easier for us to see. This is the daily chart here, and we did see highs, you know, in February, but we're now kind of 3% below these highs, like those recent gains.
I think it's still quite astonishing how near we are.
Yeah.
Given the
rate of the bounce back, right?
Yeah, absolutely. I mean, to be honest, we have become somewhat accustomed to these rapid sell-offs and rapid recoveries. We obviously had this. We had this with the sort of Credit Suisse debacle, the Silicon Valley Bank debacle. We had it last year, or 2023, a little bit in November. We saw a bit of a sell-off and a quick recovery, and we've seen it again now. Interesting to understand why that's the case. And I think there's elements of the fact that, you know, we've seen a huge participation of the retail trader, you know, potentially buying dips.
Just looking at my cursor there, that looks like it could be a retest there. And it's tried twice. It's broken above that 5950 level, and a break above that could see it going to 6040, and then after perhaps back to those February highs again. But it all depends on momentum eye on volumes.
I think how the mood was at the trough of that figure, of that there. I mean, no one really would have estimated that we were going to get such a rapid recovery. It felt like we could get into correction territory. We weren't quite there, into bear market territory. We weren't quite there yet, but, you know, I spoke to different companies and some saying, we think it could be a bear market. Others were saying there's no chance of the bear. But I think that the consensus was expect volatility to continue, and we've got volatility, but volatility much on the upside, which I think has surprised many people. Sentiment, given the macro data, given everything going on in the world.
100%. Right. We are going to go to a quick break, but don't go away because Jolie Lepselter is going to be right here with me, and we are going to talk about options strategies alongside technicals as well. So all your questions, hit that like and subscribe button, slam them here right now. Jolie's coming up next.
Trade live with days from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and trade of the week and CMC of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favorite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Spencer's food offer has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? Trader, you could go long on Nike, expecting its share price to rebound over the cuts. Also, alongside that, could go short on Adidas, expecting it to cool off at a big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along its share price. But then they spent more profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's market space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you will see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or partial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trading with access to the tools that you need and further education on the IG Academy.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with each an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, welcome back, and Julie. Let's Salter here to talk about tools. Tesla being the first one because we have so many dates coming out.
Sure.
Yeah. Robotaxi service testing in Texas, Austin, in the 12th.
Yeah. And I'm from Texas. So, I mean, originally, yeah. No, I haven't been in one of those cars that just self-drives. No human being aside from your.
Really? Here they're all over the place, being tested.
Yeah, I would love to go in
especially
one.
Like San Francisco, places in China. They've got what is it? Something Go. And I've been in one in a car show.
How was that?
It was a bit scary because the thing is, you see them driving and the steering wheel covered by this plastic thing, so no one can lunge at it and create an accident, right?
Yeah.
Imagine stag do or hen do, right in the back. And
Yeah.
then, but what I find most fascinating is it's listening to you. Yeah. So as you're kind of talking about, oh well, I really need to go to the toilet. It then tells you there is a toilet service station in 10 kilometers or 5 kilometers. Or when you pull into a service station, it can tell you, I hear you're hungry, Julie.
Yeah, do you need a snack?
Yeah.
There's a Tesco Express that way.
Yeah. Well, look at her. She's Tesco Express. She's like local. She's part of the London crowd.
I'm trying. But yeah, how interesting. I would imagine it could be very, very helpful, but then you also have to be careful.
Yeah.
Don't want them to know everything.
Yeah.
I don't know.
Yeah. And then this from the not too distant future to execute its fully autonomous, I'm not going to believe it until I see it, delivery of a Model. So I know I have lots of friends in Model Ys, but this is be the first delivery of an autonomous one.
I see.
Should be incredible. Likely to be in your hometown.
Yeah, or close by. Yeah, not
Austin.
too far. Not too far. That's amazing. I can't wait to see more. But I'm sure, Tesla's always controversial, always very volatile. So I'm sure there's people who are like, wow, what an amazing invention. And there's people like, Elon, not another robo-car. It's all always up and down.
So I have this Tesla chart here, and I'm going to tell you the levels I'm looking at.
Sure.
And then I'd love to see an option strategy. So that our viewers have another option. So looking at key resistance levels at around the 352 bucks, which is around the area of interest. I'm going to draw it out for you. Here we go, around the 352, around there.
Nice.
And what I'm looking for is that, this ties nicely with the 50% retracement level. I know that's the fib for those of you who are Fibonacci, but it is still something that we look out for. The recent swing high was around the 362 mark. So looking to see whether we see Tesla start to move back towards that area of interest, or if we fail to get above the 335 level, then perhaps we could then go further down.
Sure. Yeah. For options, a couple different things we could do here. Depends.
Tell us.
Yes. So we're going. I would be somebody who has a look on Tesla. There's so much going on, and this is just me, generally speaking, playing a role of somebody who is bullish.
Does Jolie know? We don't.
No. But I'm just saying, there's obviously so much going on in the month of June for Tesla. A couple different things. So if we wanted to practice a short strategy, because we know from Mr. Tom Sosnoff that when you sell an option, it's got a higher probability of profit than if you buy an option. So if we were a bit more clever in that regard, we could theoretically sell a put option in June. So we've got some stuff all throughout June. It looks so. Say, there's some stuff coming out June 12th. Here we go have June 13th. We could theoretically sell a put option for what we think it would, climb to. Right now, it's kind of at a lower point, right? We've seen that like 350 is kind of a median here, and there's like some room to grow. So say we thought things were going to go up, we would sell a put option at 350. Here, we would get a nice little credit. Again, just as a disclaimer, the U.S. options, the listed options market is not open, so these prices are not going to move. So say we wanted to sell this guy, and we would get the nice little 23.95 should we get filled at that price. You do have to uphold a lot of capital because, again, shorting a single-legged option risky strategy. You need a margin account. But if for any reason, right, it keeps on climbing up, we think it's going to go to like 375. If the other side of that option, right, the long option holder, they're not going to get value from selling at 350. If Tesla's trading at 355, they could just sell it out in the market for a better value. So in doing this, you could get your credit. Theoretically, it could just expire out of the money and you could keep all of your credit. That would be one scenario, right? The shorting aspect of things, I'm going to remove this leg. Say we are a little less risky. We don't even want, to short, but we still have the same sentiment. We could buy a call option. So say, hey, I think this thing's about to shoot up to 355. Let me buy a call option at 350. So I'm going to get a better value when it shoots up to 355. I can buy it for a steal at 350. And you could either choose to take delivery if you have enough capital on hand, or you could just simply sell the option and make a profit because at that time it would be in the money, it would be more valuable.
Yeah.
Boom, boom.
I like that.
Yeah.
And just all about the safer option. I like that less risky strategy. Great. So that's fantastic stuff. Two ways straight away for all you guys out there and all you girls as well. Broadcom. Let's have Broadcom because we are counting down to Broadcom's earnings as we speak, having a look at the chart there. Very strong upward trend there. And also what's key here is to see how many green candles we've had recently. This tells you that the bulls are in control, right?
Sure.
They've been rallying strongly into earnings, hitting, let's have a look. These are real highs there. Having a look at the weekly and also the monthly. Do this to make sure I haven't. So we are like record highs, just below that high seen, $265 I think it was, and very strong upward trend there. Some key support and resistance levels. Every time I say this to my husband, he thinks I'm crazy because I talk a lot about support and resistance.
Right. Yeah.
Is around that 263 hourly chart here, because that will be easier for you to spot. So 256 there. This would be the area of interest for me. Putting the rectangle. Oh, not the rectangle. That was not the rectangle. Sorry.
Yeah. It's hard.
It is very hard, isn't it? Especially when you're talking at the same time.
Virtual, manual, whatever kind of drawing you're doing is hard.
Yeah. So here we are. That's the area of interest. This is an area that if you see it get close to that rectangle, it might bounce back, in which case it means further upside. If it crosses this area and falls below, then we could then see downside toward perhaps the next area of interest, which is around the 249 level. What is your play on this on the options side?
Well, just so we have a different point of view than Tesla, with earnings are coming out today, probably after the U.S. market close. I'm not sure. It could come out earlier in the day. Have already kind of taken their picks. This bad boy is going to go. So say I am a different trader with a different sentiment than Tesla. I think this guy may be overvalued, and perhaps it already hit its peak. If that were the case, I would say, oof, let me go ahead and protect those shares I just bought, right? I want to go ahead and sell them, make sure that I have protection and can sell them at a profit. So say with AVGO, today is the 5th. I just bought some shares. I think these guys are about to do a deep dive tomorrow. I just want to get rid of them because I don't know what's going to happen. I'm nervous, right? We could theoretically buy an option. So that would allow us, give us the right to sell at a specific price. We're going to pay a debit, but we're hoping that that's going to protect our shares and lock us in a profit in the long run. So say I bought yesterday at like 257, right? I want to sell higher than that. I don't want to put down too much capital, so I buy a 260 put, which would allow me to sell at 260. Or if I decided, you know what? I want to hold on to these a little bit longer. I could also seek to just sell them, and if it's in the money, be more profitable than when I bought it, most likely. I will say there's not a whole lot of time value left, so options will be, you know, there's less time for a move to make with such a short time frame here. But it's definitely something to consider.
Right,
and
right.
it's definitely, it's definitely baked into the pricing. So because we've only got like 1 day left, right? There's not a whole lot of time decay left, not a whole lot of time for it to make a big move. So that should bring down the price, but then again, you know, may not work in our favor. So that's one option. Option number 2 is we could, I'm just going to remove this leg. Option number 2, if we want to go on the flip side, we want to something instead. We want to get that cash up front, and then hopefully it's either out of the money and we get to keep that little small profit, or we get to sell it, well, have to deliver those shares, sell those shares to the option buyer. But we have autonomy. We can pick our strike, so we get to pick. So even if they do get called away, we know exactly that strike. So say we want to, we in this example bought at 255. Sell this guy at 257.5, right? We'd get a credit here. We know this is again a riskier strategy, but this is a way to capture a different sentiment on a different stock.
I love this. I love this, Julie. And what this ties in with as well, both your strategies there, is that I've just whacked up whilst listening to you a momentum indicator, the RSI here.
Sure.
And you were saying that maybe you think that, you know, this guy's got a bit too toppy now, and maybe the earnings means there's going to be a pullback. Well, this, and I'm going to put the oval function here so that it's easier for you to see, suggests that we could potentially have some sort of a pullback, because the RSI is currently over, indicating it's in overbought territory, right? Of course, it's had such a run.
Yeah, it's pretty impressive. Yeah, leading up to the earnings.
Because I am piping up. Monkey Man is a loyal viewer of ours. Also, one of our clients. Let's have a look. Hims and Hers, a company that sells all sorts of things, including therapies and services. I noticed in the US there are adverts all over the place.
All over the place, everywhere.
Super
Social
Bowl,
media, Super Bowl, yeah, wherever you go.
How prevalent is it? Like, do you know loads of people that use their products?
I wouldn't say no loads of people who use them, but I think telehealth in general is like just a big deal right now. I think people would prefer to interact with humans as little as possible, unfortunately. But it's competitive getting a doctor's appointment, at least in Chicago.
It is very competitive.
It's hard, and this is kind of a way to skirt around that. Of course, you know, there's certain scenarios people are going to want to see somebody in person. But if you're like, hey, this isn't serious, I just need something like right away. Yeah, definitely a big deal. I will say there's other competitors, but the marketing does stand out. It's definitely a catchy name, kind of a distinct point of view to something a bit smaller, which to market as hard.
Jugger, man, you are being used. Aren't we all being used? I love it.
Yeah.
Speaking of which, Hims and Hers, you know, I also very much like their marketing positioning. You know, the Super Bowl advert, they kind of try to portray themselves as like the telehealth medicine, the cheaper option to the man or woman on the street.
Sure.
As opposed to those people who can only afford those skinny pens. But having a look at the moving averages, right? So the way to do this, the easiest way, is just go there and then the moving average up. I'm sure all our trader friends are very familiar with this, but some of you who are not familiar, you know, message me and say, and where can I find this button? There you are. You can also change it on the left-hand side. If you wanted, for example, some people use, you know, 200. You can easily change that there. So you get 200 and hit apply and so forth.
Yeah.
And at the moment, looking at the moving averages, seeing here is that the action is still overall a bullish trend. However, we are starting to move across into the 50-day moving average.
Right.
We've got this very interesting, I know our trader friends have interest in candlesticks as well. For those of you who haven't checked it out, on the shorts page on YouTube, I have been doing a very brief 101 candlestick technical shorts, and there are, I think, 5 of them now, so you can watch them very quickly. And I try and make it as simple as possible. See these two almost like inverted hammers there?
Yeah.
And that there was buying, but then bulls failed to stay in control. It tried again and failed in control, and you see the body of the candlestick move lower.
Yeah, it's interesting too, because when you looking at the wider chart, I'm noticing that it's been rallying pretty well within 2025. It looks like, but it doesn't look like it's at high, which is pretty interesting. Yeah, especially as we see more market. We see it kind of everywhere. It seems like it's, you know, done a lot of business. So it's quite interesting that it hasn't reached its all-time high.
Yeah.
Yeah.
And key supports, I always put this on just so that it's easy for me to see. Around that 61 level is where I'm looking at, and also that 59 level. Because, you know, we've had a lot of action in between there, despite it trying to break through.
Sure.
And failure to do so means further downside in the short term. What's your call on the option side?
On the option side, I would say, you know, just based off of what we're seeing, there are 2 different sentiments, right? Aren't there always a bull, a bear? So
That's what makes a market.
Exactly. So say in this scenario, I am going to take the opposite side. I say, hey, they haven't reached their all-time high yet. Forget about them. And then also, these Europeans, they're not going to want to use Hims. They're going to want to use what they know. So say I think that it's just going to plummet. They've spent too much on marketing, whatnot. I could do pretty similar strategy to what we just discussed with AVGO. But say I think, you know what, actually, I'll take that back. Say I'm pretty neutral. Say I'm pretty neutral. In this instance, I could theoretically sell a call option, thinking that it's just going to kind of like stay around where it is, so that I could, and say because I'm neutral, I'm looking at something that's going to expire tomorrow. A lot of time value yet left. So if I think this guy is just going to, I could sell it and get my nice and just sit back, wait, hope it's not in the money, and then just let it expire or buy it back for super cheap.
Nice.
Yeah. So that would be one way to go about that. Yeah, I would say if you are neutral, it of your best interest to go long on an option, especially something that's going to expire pretty soon, because we know that time decay is not working in our favor. Potentially, we could buy something further down the line, like a July option, and we think Hims is going to stay around. Same here. We could theoretically buy something pretty close with that time value attached. And then if it does make a move, within the next 2 months here, like neutral, but maybe it may move up a little bit. We're going to buy some time. And if there is a big move that makes, go ahead and sell it when it reaches the price that you'd like.
Nice.
That's another option.
Yeah, I like that. I like that. A longer term view. Let's take a look at the as well. Quite a few people saying thanks so much for strategies. Arsac saying, Ange, can you look at my question? Please rubric for today's earnings. For those of you looking at rubric, cloud data management firm and data company as well, and the software can be used both on premises and in the cloud. Wonder if I can quickly whack that up for you. At rubric, and Arsac also said, bought, but HIMS has bought a European telehealth this week. I think you're right. It's called Zaha.
Yeah.
So that is, yeah, here we are, rubric there. I'm going to take off the moving averages to make it a bit cleaner. But a rubric has got a clear upward trend as well. I like that chart, Arsac. Lots of green candles. But bear in mind, buyer beware. There is a doji here, which is on the daily chart. Just be aware of that if you're trading the short term, because a doji means that the buyers and the sellers are both in equal. They're both pushing the same way. So vision, right, which could be a pivot point. So what I would say about rubric is overall upward bullish. We are seeing a triple bottom there, and it has really obeyed the triple bottom. I like that when it obeys the rule. What happens is, to explain this to someone, is that you had selling and then it hit that resistance. People came back in.
Yeah, they're like, hey, it's my time to get in.
Yeah. And then you saw it fall again, and more people join the party and go, okay, I'm going to get back in again because this is my second chance. And then the third time, when the rest of the party joins in, you then see this big push.
Yep.
Yeah. So I like it when it obeys the rules. So
although right now, not too sure.
Yeah, if you're
a little fight going on.
You have a bit of a fight. Yeah. And on that note, thank you so much for with us. Hit that like and subscribe button if you use handy strategies. And also let us know what you want Jolie the next, because we're here for you, trader friends. We're here to help you trade better and to hold your hand through this. You are not alone. You have us here and Rich as well. So do slam the like and subscribe button and email me at ask@IG for more trading ideas and strategies.
Kill Bill, or kill the Bill. It's Wednesday, June 4th, 2024. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, as we take you through the rest of this trading hour. Futures market closes at 5 p.m. Eastern. If you're joining us on the platform, tastylive.com, thank you for joining us. But come over to YouTube. Tell us what you're trading, what you think of this action. If the bears still have them right where Ilya wants them. We see a market that actually goes nowhere today. Where's the trading volume again? Bad economic data this morning. ADP, terrible. ISM services, contraction. That wasn't anticipated. What wasn't good news for stocks was actually very good news for bonds. ZN, ZB, both up. Bonds, treasuries rather, higher across the curve. Likewise, good news for the metals, which bouncing back after being dented yesterday, should we say. Energy pulls back in. We likewise see a U.S. dollar pull back slightly as the Canadian dollar rallies to a fresh yearly high in the wake of a Bank of Canada rate decision. Of course, tomorrow we do have an ECB to pay attention to. So, Dylan, much to Tom's chagrin, we are going to talk about the euro here.
Oh, yeah.
Other than that, we're getting ready for Broadcom earnings tomorrow. We have non-farm payrolls on Friday. Elon Musk is out here tweeting, kill the bill, and send back all the congressmen who voted for the bill in 2025. We got to bring them back in 2026. Dylan, I don't know what the heck's going on down in D.C. But you know what? This market doesn't care because the S&P 500 is only down by 0.04%. Nasdaq's up by 0.25. The Russell's off by 0.28. The serious move in the market today comes via the long end. ZB, lots to say here in a little bit, but that is now a push to the highest level that we've seen in about 3 weeks now, vindicating perhaps a bullish falling wedge. Dylan, before we give Ilya the mic, because I know he wants to talk about that PMI report, what say you about this turn to the middle of the week? What's with this nothing of a Wednesday here?
I mean, I just think it speaks to, Tom and I were talking about it earlier, the increasing irrelevance of the Trump administration from a market perspective and the increasing relevance of normalized economic activity and behavior, whether it's earnings, pick your favorite sort of economic measurement. And in this particular instance, I think what you're seeing is, one, the marginalization of the Trump administration from the market, and two, anticipation of a jobs number on Friday and no one wanting to get in front of it and no one wanting to and everybody's sort of taking a relief. It's almost like having survived a hurricane and you're still alive and now the water is calm and the sun is out. And there might just be a few days where people just lie in the boat and float a little bit and wait to see what happens next. And I think that's kind of what you're looking at here is the realization that there was a panic that there actually was that the Trump administration was going to be relevant to what happens in the marketplace based on their all the various rhetoric that was flying around. And now I think there's a recovery from that belief and a period of calm as people sort of try to recenter to look at actual economic data to see whether in fact, I shouldn't even say whether, but the degree to which in fact some of the chaotic rhetoric of the last couple of months has had any real impact on something like the jobs market, which is fundamentally the foundation of the American economy at this point relative to expectations for people's ability to pay their bills every month.
Ilya, speaking of paying bills every month, we did get that ISM services report today. Services are 2/3, 70% of all jobs in the country.
More even.
More even.
Yeah.
ISM services comes in today at 49.9. Before you get into it, just the usual explainer on these PMIs or ISM reports. These are what is known as diffusion indexes. Survey respondents are given 3 choices. Things are getting better, they're staying the same, or they're getting worse. You blend all the answers together. If they're worse, it's a 0. If they're better, it's 100. If it's the same, 50. You blend them all together. 50 is your line in the sand. Above 50, the measurement is expanding. Below 50, it's contracting. And so today comes in at 49.9. Just a hair into contraction territory. But it's, of course, framed by that weak ADP report this morning. ADP coming in below 40K. I think 33K on the nose. So, Ilya, this had to be, as I joked with Nick today, admittedly, I said, this is This is making Ilya's morning. Ilya probably woke up this morning, poured himself a cup of coffee, right? It's before 1 p.m. Dylan, so he has a cappuccino. And he says, okay, so PMI's down. Make my day. I guess the question is, why aren't stocks down more? Because this feels a lot scarier than the February 21st report that we saw.
For the record, Ilya does not put milk in his coffee, but as he drinks his fancy black coffee, he was definitely very encouraged to see these numbers today, because when you look at the internals of these numbers, they really start to put together the architecture of the argument that I've been making for a long time. And the market reaction today really seems to comport with that as well, all of which is what you want to see as a macro-minded kind of a trader, because timing is our weakest suit. We get things wrong on the timing front constantly. And so from the price action response and from the internals of the data lining up, you get the sense that it's all kind of starting to happen. So first, the data. 49.9 doesn't look like it's the world's worst number because you're 0.1 diffusion index point away from 50. So it stands still. It's a very modest contraction. Let's be very sort of measured in the way we do this. This is not the most bearish thing in the world at face value. But when you look at the internals, they are very troubling indeed. And I won't even go into the sort of assorted comments from various industries here, from construction to healthcare to finance to retail to you name it. It's tariffs this and tariffs that, which is interesting, of course, because this is the service sector that we're talking about. Imports are mainly on the goods side. So this just tells you what people in the service sector, which is mainly serviced by domestic firms, and what those domestic firms face in their supply chains and in the behavior of consumers as a response to the tariff back and forth, that they're constantly talking about tariffs and almost exclusively about them across sectors. That's very eye-catching. But if we look at the numbers themselves, we have the first contraction of what may become a trend here, but we've certainly moved from expansion to contraction here overall. Business activity and output flat, new orders rapidly shrinking, employment stalling, and prices surging for the 96th consecutive month and at a faster clip. And the month-on-month change in price inputs, quite significant, another 3.6 index points, added to not just the fact that there's inflation, but the speed of it. And that's the stagflation thing that we're afraid of. That's what you don't want to see.
Why do you think the equity market's not more alarmed?
So what we saw as the initial response to all of this was an immediate adjustment in the bonds. And this is where I think both the equity market response starts to get explained, and also where kind of my preferred narrative starts to reveal itself in the price action. The biggest move in the bonds, and the bonds moved higher across the curve, yields moved lower across the curve. The biggest move was at the long end. The front end barely budged. And what all of this, of course, suggests is what we've been talking about before, which is that the Fed is not in a hurry to cut rates. And then rate cuts will have to get stuffed in the back end of the curve, because what the Fed is going to have to do is wait for the recession to occur or all but occur. It's going to have to wait, in any case, for some kind of unmistakable economic pain that beckons action. And that will mean that they're late. And because they're late...
They're always late. Always late.
Well, they're always late, but they're going to be late relative to themselves, right? The Fed is, by definition, a reactive institution.
For sure.
And it's going to have to be able to justify its actions. Here, the concern, as it was last year, through actually about this same period, a little bit earlier in the year, maybe about April, May it started. Here we're waiting a little bit longer. That the Fed is going to be later than the Fed even would be normally. And that they're going to have to do a lot of catch up. And so what the idea of later cuts will mean is more of them are going to have to occur. And so the long end really rallies here. I think that helps to explain in part why stocks are not rallying, but also why they're not selling off. Markets like rate cuts, but they're circumspect on later rate cuts. They would prefer them sooner.
Could I posit why is the Russell is, just to poke. This is what's getting me today, right? At the start of the week, we had this divergence where stocks, slow kid in the classroom, as is the case. Everything else is kind of sell America, gold up, dollar down, bonds down.
Yeah.
Today, dollar down, bonds up. Almost classic interest rate differential story. Fine.
Sure.
Dollar soft, metal's a little bit stronger. Fine. Interest rate differential story. Stocks, though, not reflecting that same type of recession fear. And the Russell today is not, if this was about lower rates, if the stocks market was excited about lower rates, those floating rate debt companies, the small caps would be a little bit more perky.
Well, and this is the whole thing. This is the whole thing. I think you're hitting it exactly on the head. This isn't excitement about rate cuts because those
yields are up for the
now.
ZB is up for the wrong reason.
Right.
Is what you're saying.
Those would need to be coming now, right? This is stocks go, well, okay, there's cuts. Yes, this means the Fed is closer. But how much closer? Not close enough. This is later rate cuts. This is the Fed is going to be late. And there's an interesting report that
inflation
comes out.
is more of a risk, and there's more inflation risk than we want.
I mean, there's certainly, and what a segue. It's like Dylan is mainlining my brain step. It's exactly the idea here that inflation is at the very least more uncertain because you get a report from the Wall Street Journal today that follows the recent numbers from the Bureau of Labor Statistics and says that because of budget cuts, because of the hiring freeze earlier in the year as part of the now collapsed DOGE effort and various other things, the Bureau of Labor Statistics has had to significantly reduce its surveying of surveying and data collection for CPI numbers. And they've had to rely on these imputed, less reliable measures for much more of the data. So whereas before, this alternative estimation methodology accounted for maybe between 10 and 15% of the data, that's what's been normal basically since COVID. In the most recent data, the April data, it's approaching 30%, almost double. And so these are not great numbers here, maybe. These numbers, these inflation numbers now might be kind of fuzzy. And so if the Fed was looking at this and they were already unsure which side of their mandate they're supposed to prioritize, with fuzzy data, they're going to be more unsure. They're going to want to wait longer. They're going to want to really, really, really make sure that they don't let inflation expectations off the hook. And so that's just more delay. That's just waiting for more pain to become realized. So for stocks, this is kind of a confusing mix. cuts, good. Late cuts for bad reasons, not good. So they ultimately don't go anywhere. But I think the bonds and the dollar really tell you, and gold, what the path of least resistance is here. And I think then as this data keeps getting soggier and you get more and more speculation, you get a real long runway to go, okay, now they're going to be closer. Now they're going to be closer. Now they're going to be closer. And you get this long runway for bonds to go higher and for the dollar to sell off as the market follows all of the Fed speculation around when they'll actually go step by step by step. But because that'll be long because the process is going to be elongated, there's lots of room for that speculation to be a thing we talk about.
Dylan, Ilya mentions, the path of least resistance for gold, for metals, for bonds being higher right now. I can't help but recall the fact that gold and bonds are typically the things that do best when we do have recession coming into play. And so while the last few days I was trying to sell you a story, Mr. Radigan, that things were looking growthier, right? Higher yields, higher stocks, higher oil, weaker gold. That's kind of a growth story. That's not really the case here today. Gold is up. Stocks are bonds are up, oil's down. Oil's down despite this call between Trump and Putin. Dylan, I see the headline here, but I just got to use my own brain. Putin and Trump talking. Trump says that Putin tells him that Russia's going to have to respond to this weekend's drone attack. That seems like a scary headline, but as I recall, I think these two countries are at war.
Are they not currently bombarding each other? What's different there?
Dylan, what's the read on the Russia-Ukraine developments from Europe?
Pretty, I would say status. I would say it's not a point of focus. That there's much more focus in Europe on concern about the chaos of the American policymaking apparatus that is represented by the Trump administration, the Trump-Musk breakup, the American overall policy. I would say that there's much more discussion and concern in Europe, in the business community, focused on the disruption to the world that's represented by the American presidency than anything going on in the war between Russia and Ukraine. And that there's no sense, and maybe wrong, maybe misguided, but there's no sense that whatever happens between Russia and Ukraine, that it's any more of a threat than it was, before the latest Ukrainian maneuver of escalating outside of what is perceived to be a very deadly and catastrophic but entirely contained military theater between two Eastern European countries. No concern. And I would even go so far as to say that the whole Trump headline around, that's about Trump. That has nothing to do with Putin or Russia or anything Russia is or isn't going to do. That's about Trump wanting to position himself as somebody who talks to the president of Russia. And he's like, I talked to the president of Russia, and the president of Russia told me he's going to have to do something. Well, no shit. Like, right. To Ilya's point, like they're at war. And so I don't even think that I guess my point is that headline is irrelevant, because that headline is about Donald Trump trying to posture himself as important, to try to portray himself as someone who is in a dialogue with some other people that are important, not that Trump has magically extracted a profoundly and shockingly hard to come by piece of intelligence that he talked to the Russian president, and the Russian president told him he's going to have to respond. It's ridiculous.
Oh yeah, this headline obviously was scary, but again, what did it do to the market today? I mean, I don't want to, I hate saying this, and you and I have, the three of us have had this discussion for years now, where if it was Ilya, I mean, you and I came over to Tasty officially in late December 22. Mm-hmm. So I don't think we were here through, I mean, we were on Jones and Friends, right? When the Russia-Ukraine war broke out.
Yes.
But like, even with Israel-Gaza, for example, I think it took like a month for the market to digest it and get into a place like where, oh, this is going to be something that's happening? And does it suit us to react to every single headline every single day? Or do we just need to take the long view and price this in as there's now a premium in oil, there's a premium in gold? It feels like the market's kind of stuck there still with Russia-Ukraine. What happened over the weekend was materially significant in perhaps a big picture sense of things. But headlines like this about there being missiles going back and forth. American Embassy just put out an alert about an hour ago that Americans in Kyiv should be prepared to take cover because intelligence suggests there's going to be Russian shock and awe. Oil is off on today's session, 1.18% lower. Natural gas is up by 0.03%. I'm not asking what this all means today. My question is, at a 38.9 IVR, given the headlines we're seeing, is oil vol underpriced? And then I suppose, Dylan, are we going to have the classic Radigan trade where we're going to get a headline that spikes oil that really has no bearing on long-term trends and we should absolutely fade it? I mean, that's where my head's at.
I mean, from a trading perspective, I would say that I'm hopeful, but I would say that the possibility of such a thing now seems to be higher than it has been in recent months, except for the fact that the market sort of like it goes back to the buy the dip conversation we had from a couple of days ago, where the market seems to be getting better and better at not even, we may never get the spike. The same way in some cases we're never getting the dip.
Ilya, if there's a spike around some headlines related to Russia-Ukraine, I think we're both of the mindset, all three of us are the mindset that we'd want to fade it here. But square the circle for me. Like, are we waiting for a reaction, or is today the reaction itself that, yes, something's going to happen, but who cares at the end of it? There's no reason to get bullish oil because of geopolitics at these levels. We should be waiting to fade it, quite frankly.
In fairness, I've been fading it already. So if you look at that evening star on the previous test of that gray line that you have there after the most recent upswing from the range bottom around 54, 53, I've been short since then. And I'm holding it and I'm sort of waiting for things to happen because obviously momentum hasn't built, but neither has the trade been invalidated. So for me, the story is basically the same. You're stuck at a range top. The bias risk reward wise is to be short. If you're wrong by a little because you're close to a breakout point. And if you're right, then you don't need to be right by a lot. You just need to get down into the bottom of that range again, around 54, 53. And you're very much skewed to have more room to go down there than you do on the top side, considering you're up against resistance. If you break that resistance, well, then you get out because then you're wrong. But the risk reward is such that you lose a little in the test of that idea, and you gain a lot if you go the other way. So that underlying logic continues to animate what I'm doing. I think it's cute that Russia wants to posture, if that's what Putin said, right? We have to kind of filter the thing in the retelling of the president. It may not have been nearly so dramatic when it came out of the mouth of Russia's president in the phone call, but the whole thing here was that Ukraine, after aggressive and record-setting bombardment of it by Russia ahead of this operation, launched this attack and destroyed a ton of their bomber fleet, therefore degrading their ability to strike back. So this is really the whole thing. It's like, well, yeah, they're going to strike back. Of course they are. This is a war. But they have less ability to do that than they did when they were setting records for how hard they were bombing Ukraine just a few weeks ago.
Well, so I mean, there's a lot of speculation here, right? Like we should go to the answer.
Yeah.
Right.
Let's go to the answer.
Who are some of Russia's biggest allies, Dylan, that you think Putin's friendly with?
China.
India. India, okay.
North Korea, Iran.
No, Iran, right? Okay, so we'll go to Twitter. Unfortunately, I can't message the Russian official profile, but I can message the Ayatollah.
I can write the thing for you in Russian if you want.
No, it's fine. We'll just send the Ayatollah a message here on
Don't
Twitter.
show off, Ilya. Don't show off.
Do you know if Russia's going to attack Ukraine tonight? Sent. Maybe we'll have some news for the viewers of Overtime. Maybe the Ayatollah responds to me this time, unlike last time when he ignored my message. I just think it's funny that I can direct message the Ayatollah of Iran on Twitter.
Have you ever gotten a response, Chris?
He has not. I actually got blocked on the English account, so I send messages to the Farsi one.
You're saying you've been harassing the English language Ayatollah so much on DM that they blocked you?
I am trying to get banned from a country, Mr. Radigan. I told you this. This is not like a shtick.
I know, but I just don't want you to ban yourself from Turkey. It's such a great country. It would be a tragedy for you to miss out on some of the fine honeyed and almond-laden and pistachio-laden desserts of southwestern Turkey. But I would say that if Iran actually did ban you, that's a response. Like, it's an accomplishment if you were so annoying to the DM of the Ayatollah that they took the time to block you
from the entire country, right? Well,
you could probably do an entire podcast where you just sit around with a screen share like we do with trading screens and just DM various pieces, like DM the Pope, DM the Russian embassy, like just go direct to
DM pieces of, and then you say the Pope first.
Yeah.
Come on.
DM Kim Jong-un.
He's not on Twitter.
What are you having for dinner tonight, bud?
Well, I would love to know, because there's a poly market. Like, this is part of the reason. There's a poly market. Will there be a nuclear detonation in 2025? And the conditions are, if there's a test, if there's an accidental one, a usage, right? And I'm not saying that I'm expecting a nuclear bomb to be used in Ukraine by any stretch of the imagination, but North Korea just had one of their big destroyers that they unveiled sink immediately during the opening ceremony to get it into the water. North Korea just rounded up a bunch of senior military officers and imprisoned them for the failure to get this new naval craft into the water. So what has Kim Jong-un done in the past? Have they done nuclear tests, right, to get attention? It's been years. They didn't do any during the Biden era. I think they last did them in, I can't remember the last North Korean nuclear test, 2015, 16, 17, late Obama, early Trump, somewhere in that neighborhood, right? So there's some things in play here that we have to watch out. Today was an unexciting day. S&P was down by 0.06%, and those are the kind of days where it's like, okay, what pot can we stir, Mr. Radigan?
I mean, I like the thing, we just DM everybody. You're like, are you planning to use a nuclear weapon anytime in the near future, sir? And just sort of do the rounds.
That's what I would be asking Kim Jong-un.
Yeah.
He was.
But I mean, all of our sort of dark humor aside, the financial markets are not worried about this at all.
Yeah.
And they're the amount of money that is at stake in the global energy market or in the NASDAQ, which we are looking at basically all the way back from the idiot day sell-off. For us to suggest that, I mean, I realized Ilya's points relative to, the economic data and all the rest of it, but I also know Ilya keeps it small and nimble because he's smart enough to know that the market is not prevailed over by a bunch of idiots, unlike some other institutions.
Quite right.
And the market is not worried. The stock market is not worried. The oil market is not worried. And I think that I actually think that the jobs number is vastly more important than anything that Russia does in Ukraine.
I would absolutely agree with that. I think the much larger issue is growth, and growth is a function of kind of balancing tariff chaos with interest rate expectations, and that's the jobs number. That's the next big inflection point. Now, it is certainly the case that desperation can breed extreme action, but I don't think we're in the kind of realm here where Russia will be the actor that pulls the ripcord on some sort of a tactical nuke or some such thing.
Well, that Pi market bet, for what it's worth, and obviously Pi market's not available to be traded if you're a U.S. customer. But for those that do trade it, I would point out that the expiration for that contract is through the end of 2025. So, a North Korean nuclear test, Iranian nuclear test. Apparently, they have enough enriched uranium for 10 bombs now, according to the latest reports, which is why Trump is pushing for a deal. And they should get a deal, right? Like, restore the deal that we had with them previously. If you read the text of the current agreement that we're working on with Iran, it's resuscitating the Obama nuclear deal. So if that's where we go, then they don't get a bomb again. That risk is off the table. Trump seems to want that first. And I also don't think it's a coincidence that he used his comments here on his talk with President Putin in Russia to mention that he was asking Putin to see if he could do anything to get the Iranian conversation going. So it feels like there's some leverage in here on both sides, right? Putin wants the U.S. to stop helping Ukraine. The U.S. wants Russia to get Iran to agree to a deal. I'm not going to give him credit and say there's some grand bargain going on behind the scenes, right? I'm not going to say there's some 4D chess here. Far too gratuitous. But these aren't unrelated. And today's lack of reaction to the news story, Ilya, I think does serve the purpose of telling you what was important today. So if we look to our cross-asset performance, if Monday was growth, today kind of feels like recession. Today kind of feels like
don't you think that we're also in a world where this jobs number, and I don't want to steal the thunder from tomorrow's conversation, but where this jobs number is going to be one of those ones where if it's a strong jobs report, the market, good news will be good news and bad news will be bad news, basically. That if there's a strong jobs number, that will be unexpected and supportive of the ebullience of the equity markets, for instance.
Ilya,
or
you can go
if there's a
first.
strong job number, got to eliminate my rate cuts and cause me to have agita.
Well, so I think this is why the response today to weak data is so interesting. We know the stock market likes going up. We know it's biased to interpret things in ways that allow it to do that. And today, it got bad data that it could not interpret in its favor, despite the fact that yields fell across the curve. In my mind, the way you explain that is it's because the rate cuts are coming later and because the Fed is not going to be sold. So if you go and you get a weak jobs number, I think the market isn't going to like it whatsoever. And I think the reason the market isn't going to like it is because it's going to say, here's the downturn and the Fed's not coming. There's going to have to be a lot more for the Fed to really jump into action. And by the way, the fact that the president is back to goading Powell to cut rates probably means that the Fed goes even slower because they don't want to risk their credibility. So in my mind, it's probably bad news is bad. Good news is we'll see. Because either way, you get a good jobs number. Okay, rate cuts are delayed, but maybe that's not so scary if the economy is all right.
It feels like there's how we talk about narrative flexibility with like Bitcoin or gold, where no matter what happens, you could still kind of fit the square peg into the round hole of this is good news for the asset.
Sure.
I kind of feel like we don't have that with the jobs report on Friday. I mean, sure, we had the JOLTS report, which is very lagged for April, shows an improvement. And there's the quirk that we do get the China-U.S. trade detente during the NFP reference week before you'd actually start to see all of the port layoffs and trucker layoffs and retail store clerk layoffs, right, begin to domino here. There's part of me that says the data are stale and don't reflect the world that we're heading into. There's part of me that says the data are going to be better than what I think people are giving them credit for. There's also the potential for them to be terrible. So if they're good, Ilya, you go, well, ISM services for May. I mean, like, awful, right?
Yeah.
Like we just, there's more pain coming. I can ignore a good number here. Forward-looking indicators, more contemporaneous indicators are telling me that things aren't getting better.
Mhm.
Dylan, I'm having trouble trying to find where is the jobs number that convinces people, you know what, we need not be concerned anymore. Is it 400K? Is it 1 million? I don't think that the estimate of 130K is going to cause anyone to turn around and say, see, tariff problem avoided. We're good.
Yeah, but don't you think it comes in at like 227?
I think it does have the potential to beat. Especially because ADP was...
And then everybody's like, the tariffs, no one's getting laid off. Not just little Goldilocks vibes, not too hot, not too cold. Rate cuts are still in play. Tariffs aren't that bad. I mean, I'm not saying that that's what's going to happen, but that seems to be the sweets. That's where the narrative flexibility comes in. I think your worst case, but maybe your worst case becomes your best case, is you get, minus 200. And it's sort of tariff catastrophe comes home to roost.
I'm sort of the mind that if you got minus 200, the markets might actually go, you know what? Fed's coming. This is fine. This is a legitimate hair on fire, holy moly number. Okay. They're coming. They have enough. And if you get anything middling, like you'd have to get, to Chris's point, some sort of incredible jobs growth for the markets to go,
843.
This is not just lag. This is a real thing that you can extrapolate as labor market strength. Everything else is whatever. Surveys, blah, blah, blah. This is a really good number. And yeah, there's not going to be cuts, but the economy is doing great. On we go. The worst case scenario, but also the much more likely scenario than either of those things is something middling. And if you get, and the likelihood, I mean, that's the meat of the curve, which is why I think Chris is absolutely right. It's difficult to have narrative flexibility with this number, but for if you get something on the tails on either side. If you get something on the tail at the super weak side, okay, great, the Fed's coming. If you get something on the tail at the super strong side, we're all wrong. There's no recession. All is well that ends well. But the meat of the distribution is the biggest fear of all. Because that
come in at $1.25, 90, yeah, $1.25, $1.47.
Things are slowly dying by 1,000 cuts, and the Fed's
weak sauce. Mm-hmm. How about buying the bond then?
Well, what's the worst case? What's the worst case scenario? I mean, if you get let's just say you get. We're going to talk about this tomorrow. But
worst case scenario is a weak sauce.
No, but like let's say there are 3 outcomes here: minus 200, 0, and plus 200. Plus 200, I think everyone ignores. 0, everyone panics over. A negative print is the most bullish because then the Trump administration is going to tap out. Elliot, is that crazy?
I mean, tap out. Say more about how you envision tapping out in this context.
Well, the
tap out was on the W. Bro, didn't you see when Donald Trump was on the WWE? Like he taps in, he taps out. He knows how to do it.
You know what? I actually recently saw the Netflix documentary on Vince McMahon. So actually, I just
the clip. You know, Donald Trump is an entertainment professional from the World Wrestling Federation, bro.
That's right.
In and tap out.
But this becomes the question, right? Does tapping out mean forget the tariffs? We're going back to a 2%.
It means forget the tariffs, and it means back to the drawing board with the big, beautiful bill.
If that were to happen, let's say here that we don't have a president that is absolutely incapable of saying that there was a mistake made.
He doesn't have to say there was a mistake to change his mind.
Right, but I mean, how often does that happen? But now it's also a president. It's also a president that can that has enough flexibility to say, "I'm saying this now," and if somebody says, "But you said this other thing before," he goes, "No, I didn't."
Of course,
then
that's his.
And then that's it.
Plan.
And then that's it. So all of those things, yes. But if we were to say back to a 2% tariff, back to the drawing board on the big, beautiful bill, tax cuts, whatever, I think the markets would absolutely rip. I would become bullish pretty much overnight, because that's the kind of morass and inaction for an extended period that markets love. Because then that means Washington is probably not getting in their way for a while, and they don't have to think about it. How likely? I don't think
be in the way for a while.
There,
Ron Johnson just made the rounds, 2 hours ago. He was on CNBC saying that he's not going to vote for Trump's bill in its current form. My Congressman, Mike Lawler, put out a statement today saying that if the Senate Republicans send the bill back with any changes to SALT, the SALT caucus is going to kill the bill in the House.
So that just suggests it's neither big nor beautiful.
It's kind of neither big.
It's big.
It's beautiful.
It is big. It may not be beautiful.
But it may not be beautiful.
I mean, I think the problem for these Republicans is that, in fact, it might be too big.
Dylan, I know that we have
the three of us get disgusting abomination. Sorry, I had to get it out of me.
The three of us, I read the chats. They say it's not good for your mental health to read the comments. I was born in the comments. You've merely entered them. Okay. I grew up on 4chan, on Reddit, right?
Wow.
Okay. So none of the comments bother me. I would posit that the people say that we have TDS for doubting the viability of the bill and that it's not going to work and that Doge was a joke. You have the TDS. You're so unable to see what the actual law allows for. If you want to codify the cuts that Doge is doing, you have to go through a rescission process, something that we've talked about here on Overtime. We've talked about it on The Price of Truth. The president just simply can't say, like, I don't want to spend the money that Congress is appropriating for me. That's not how our country works. There's also no fraud happening. If there's fraud, it's illegal. Sue for it. Where are the lawsuits? It's just spending that people don't like. And cutting the spending is much more difficult than people presume. So when we're saying that we don't think this bill really is going to go anywhere because of Ron Johnson, because of what Elon Musk is doing, because of what purple seat congressmen like Mike Lawler and these California and Illinois Congress people are saying in the SALT caucus, because we're trying to stay tethered to reality. We're trying to stay objective here about what is feasible and what is just a pie in the sky. And it's just campaign talk, right? Like, it's why, for the life of me, when I hear, the war in Russia, Ukraine is going to end on day one, and people are sending emails like, okay, if this happens, what assets should I own? We have to start with the first premise, like, this war is not going to end on day one. Why are you taking at face value? What would make you even think that's the truth or possible here? Oh, it's just a sales pitch. Okay, well then why are you suggesting that I need to identify assets that would benefit if this war ends on day one? Pick a lane. Pick a lane.
Hang on a second. Can I just ask a question? Are you talking to Iliad and I, or are you currently debating the chat room?
Debating the chat room. Fighting the audience.
I thought that you kind of just, I feel like you might have just broken the fourth wall, left Iliad and I here just to sort of enjoy the program.
I mean, I'm just sitting here. And
while you've gone into a direct
with everything Chris is saying.
You're doing a good job.
Go.
I agree. Carry on.
Go on.
This is kind of sucks for the era that we're moving into right now. And I made this joke with Victor, and I think I made this joke with you guys, but when I was a little boy, I thought the future was going to be flying cars. Not me tweeting something innocuous like, the earth is round, and someone responding to me, at Grok, is this true? So I would encourage everyone, don't use AI. When you see something like Doge announced, or you see a spending bill announced, take the time to actually read it. Take the time to figure out what the law is behind it. And is this a market reaction we should actually be taking to heart? And I bring that up because how many times have we been confused about this in the past week? I recall a market that overreacted last week to the announcement that the International Court of Trade was no longer going to allow those tariffs in place. But a simple read through of what the court order said basically redirected the administration to Section 122. And so by the next morning, when the administration had said, we're just going to do this through Section 122, the market rally was undone. Because people who were reading the actual court decision said, oh, this isn't going to last, I should fade it. So take the time and educate yourself, right? There are politics in play here that matter. Saying that we don't think the bill is going to pass isn't TDS. It's the actual nuts and bolts of what the senators and congressmen are saying. Maybe that's
and the
behind.
World's richest man organizing to primary anybody who votes for it doesn't help.
That's also, I mean, listen, I know Trump is the guy, he's the best thing since sliced bread, but if you are a 45-year-old congressman in the Republican Party right now, do you put your chips in Elon Musk corner or the octogenarians corner? The guy with $400 billion in the bank?
Great point.
Or the guy who is term limited?
That's a great point.
I think today's ZB move is just as much. We were freaking out last week or 2 weeks ago. We have this May 21st move. Oh gosh, the bonds, the deficits, the debts, the horror. Maybe the bonds are reflecting.
Steve Eisman, oy, the deficit.
I'm just, Dylan, maybe today's bond move isn't just about PMI and the ADP report, but also about the fact that this deficit blow up, this debt blow up bill isn't going to get passed. And so all that additional issuance at the long end of the curve isn't going to have to come into the market. I'm with Tom Sosnoff here as I get off my pedestal and I stop filibustering. If there are weakness in bonds notes over the next few days, particularly with non-farm payrolls on Friday, I'm a buyer of that dip. Not just short put spread, but given the falling wedge here, I'm looking for an opportunity to get in to buttress. Well, I'm already in here at 51 days with Nick Batista today, but go out to 79 days and do something like long the 121, short the 125 call spread. It's a 10-1, Dylan. It captures the top side of our falling wedge base, which is 121 and 10 ticks. I think we could take a madman's delight here and queue up a 10-1 shot, basically 1 in 5 probability. Long bonds, long into the curve. The bill's dead in its current form. You're not getting the debts or deficits.
Jobs number is going to be a mixed bag, will be useless, not helpful, won't be too strong, won't be too cold. It's going to be a middler.
And let's pay some respect to our friend Ilya here. The data are showing, growth earlier this week, maybe not so much growth right now. A long bond position 79 days out is as recession classic as you could get in terms of where to put your money if you think recession is coming.
Yeah.
Because since 1980, it's been land and gold that has outperformed everything else when recession arrives. So I'm done speaking for a bit. I've been bothered by some of the comments, seeing people accuse my friends Ilya and Dylan of having their blinders on, and yet you guys were ambivalent about saying Doge would fix anything, given your experience, Dylan, yours especially in politics and financial media since the global financial crisis, right? Like you know how this all works. So let's just not ride narratives here. And if we're riding narratives, I fall into this myself. This is a good check for me as anyone else. But don't just believe the headlines. Okay.
So now can I switch to my completely contrarian, sort of contrarian to myself anyway, perspective, which is that yes, long the bond, great, fine. I like silver, as we know. I would, if oil spikes on Russia, I'd sell it. But what of the madman's delight trade that is a short NASDAQ position? That the market is on the wrong side here. That the economy is slowing. That the war risk is higher than we want to believe. I mean, that all the risks are more. List your risks, and because the levels are so high. The NASDAQ's basically been going up for a month and a half.
So I have this on, but if I have it on through a put vertical in the Qs. And if I didn't have exposure, I would not be putting it on now, though I'm not unhappy enough with it to take it off. I didn't like that we closed above the range top yesterday. We talked yesterday. I mentioned that if there was a blemish on my bearish narrative, this was the glaring one. We're still underneath the spike high on this move higher. And that's why I'm not convinced to get out. So if you look, 4 candles back, or 3 back from the current candle, 4 candles away, that's that spike red right there. We haven't cleared that high. So I'm not convinced to get out of my position. If I was going to take a bet here, a new one, and deploy an incremental dollar, I would be looking at the S&P. And I would be looking at the Russell. I think Russell maybe in particular, because that's a growthier, more sensitive kind of thing. But the S&P just as attractive from the perspective that it's had a bigger run and there's more to unwind speculative sentiment-wise in the S&P than there is in the Russell. The S&P has outperformed.
I mean, if you're long the bond and short the NASDAQ, are you basically long the same thing?
Yeah.
Kinda.
If you're playing the recession trade?
Yeah.
If that, yeah. So that's...
I mean, I'm also arguing NASDAQ.
Exactly the qualifying.
Sorry.
No, so just to voice endorsement of what Chris just said, I think if the reason you're selling NASDAQ and buying bonds is because you're minded toward recession and not for some other reason that you think the narrative is going to take some sort of weird turn, if that's the reason, it's the same idea.
So would you rather be long, if you had to just gun to your head?
That's what I'm about to say.
Long the bond or short the NASDAQ, I'd be long the bond.
I think you got to be long the bond there, if only because we've seen that the stock market is willing to get ahead of itself and say growth is going to be low, but sunnier days are ahead, whereas the bond market will stay at lower levels for a longer period of time, reflecting those limited growth and inflation premiums in the short run. So stocks tend to bottom first. They tend to lead everything. So, I mean, Ilya, the question that I think we are dealing with now is traders, right? Maybe not traders that are doing it the typical tasty way, who are simply looking at the vol and looking at, the 45 in, 21 out, and are ticker agnostic, which, quite frankly, sticking to the mechanics is, you and I should probably do that more. And I think that we get in our own way sometime with our own narrative. Sure. But there are other times when we may be early, but because of the macro, we're right. And then there comes that's the convexity, right? So keeping that in mind here, over the next 45 and 21 day out window, are we likely going to get clarification as to whether or not we should be pricing in recession, which we may already did have back in April, or do we still need to yet price in stagflation, which is not an overheating economy. It's like an economy that's frozen. Nothing thaws, nothing clears. Prices stay high, activity stays low, right? It's frozen in time, basically. This is not pricing for a frozen in time economy, for a stagflating economy. Even if recession does come, the stock market's like, well, it's people induced. This is not like nature having its way. So maybe we started it, we can stop it.
Yeah.
I'm just going to take the view that right now, non-farm payrolls poses its own risk. The volume today was nothing, Dylan. So if I wanted to call the top today, 1.05 million traded, gross. That should be where we are at the halfway mark. So there's no volume. There's still positive technical drift. The slope of the moving averages is more positive today for the 1 week and the 1 month than it was yesterday. We're more overbought than we were today than we were yesterday in stochastics. And MACD is flattening out, getting ready to turn higher. And it's a summer. It's June. I mean, it's not officially summer yet, but like June, July, August, this is kind of just a melt up market. I don't know. I don't fade. Today, this is not a market you fade when it's boring like this, I guess is my point.
I agree. I mean, the only thing that you would do here if you wanted to do it is if you looked at the S&P and said you're at the top of the range, much as we just did with oil, by the way. You look at the top of the range and you say, okay, we're at the top. And because we're at the top, the risk reward is better to be short than it is to be long. If you're wrong quickly and by a little. And if you're right by more. And if you want to do that, you need duration and you need risk-defined exposure and you need small size. Because then you're not, as it were, shorting a boring market, because you're not shorting this market today. You're not shorting today's price action. You're looking at the overall structure and you're going, the risk-reward is appealing to be on the short side, but I'm going to give myself like 60 days to expiration. I'm going to use verticals, so I'm going to lock in my risk. IV is only 14.7, so it's super cheap to go out there and just buy some puts. I'm going to do it as a vertical, so I'm going to keep my risk firmly contained. The worst case scenario is in like 2 months, this thing has to expire. Worthless at a manageable loss. Okay, yeah, fine. I get that. But if you want to say, okay, I'm shorting today's move, yeah, I wouldn't do that. It's a boring day, and you got big event risk. You probably get a little bit of a digestive day tomorrow where nothing happens. Asterisk, Truth Social post risk.
Mm-hmm.
But
we're going to have to talk about it tomorrow.
Yeah.
Because overtime is out of time.
There it is.
Getting the tap from the producers. Don't want to run over again today. But hey, it was a good session. We're done. We'll be back tomorrow, same time, same place. 4 p.m. Eastern, 3 Central, every Monday through Thursday, right after last call. So for Ilya Spivak in San Francisco, Dylan Radigan in Milan, I've been Chris Vecchio in New York. Stay tuned, though. Tasty at Night continues next. Ilya's sticking around. He'll be back with Macro Money. See you there.
See you there, everybody. Another quiet day for U.S. stock markets, but bonds rip after some very eye-catching U.S. economic data suggesting the Federal Reserve is going to have to do a lot more in terms of cutting interest rates just later, not sooner. Fed has, of course, been very resistant to cutting rates as it tries to figure out whether it should prioritize growth or inflation amid the tariff scare. But one central bank that isn't afraid to cut interest rates and is going to almost certainly cut them again in less than 24 hours is the European Central Bank. They are due to make another move, and we're going to try to figure out what it all means for the markets here on Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. What we're going to do here is take a look at what this means and what this might do as a trading proposition for the markets, because there is a trading proposition seemingly to be had, even as the markets appear to be firmly in agreement, at least about the actual step that the ECB is likely to take next. Here's the expectations range here. Of course, the current ECB deposit rate at 2.25%. We can see that here. And for the June contract of the benchmark ESTR futures, this is Europe's equivalent of Fed funds futures, we can see a 25 basis point cut down to 2% is firmly priced in. So the markets know that this thing is coming, and that is then not really a point of speculative interest. If the move is already on the menu, then there isn't very much to say about what it could mean for speculators, because, of course, it's already been discounted in markets, and so it shouldn't be particularly market moving. The next question, of course, is what will be market moving, and since the move itself is already there, then the real question is what happens next. And we can see here that between what happened in March and now, we've had a meaningful shift lower in the entire curve. So it isn't just that between March and April going into now this meeting in June that we've had a shift in some of the more recent moves. It's that between March and now there's been a considerable dovish adjustment in the entire pathway for the curve. We can see rates now expected to end up much lower than they were even just 3 months ago. And so we'll look at what's going on here because the adjustment here is, needless to say, a critical one. We can see over the course of the remainder of the year, so after this cut, we have the markets priced for at least one more cut on net over the course of the rest of this year and next. And the way you get there, you can see, is 34 basis points in further easing are priced in for this year. That means at least one more 25 basis point cut and a 36% probability of one more thereafter. If you look at then what happens next year, there's a 5 basis point uplift. So there's a slight hawkish bias, very slight, we should point out, to what is expected to occur next year. That 5 basis points accounts for just a meager 20% chance that we are going to have a rate hike next year. So the overall kind of market bias here seems to be in favor of standstill and with quite a meaningful level of conviction. So that's the sort of backdrop against which the markets are going to read the statement from the Governing Council, hear what Christine Lagarde, the president of the ECB, has to say, but then also parse an update of quarterly growth and inflation forecasts. The ECB last updated this in March. That's why the shift since March is so important. And the new update is coming this time. So they're going to have all kinds of fodder to try to see if what they're looking at here, that is one, maybe two cuts this year and nothing next year, if that's still the path forward that makes sense. Here's the latest set of updates and how they compare with what the ECB said in December. We can see here that the outlook for growth in March was downgraded versus December. The outlook for inflation was upgraded, though a core inflation, so excluding energy and food, was relatively steady. Probably the most convincing bit here is that inflation has slight bias higher, but it looks like not at the core, and growth has a downside bias at least this year and next based on these projections. Now, the ECB has been very, very clear. When it published these things, it said this includes tariffs as they'd been announced up to that point, and that includes some of the tariffs on China and a little bit of the back and forth with Mexico and Canada at the start of the year. But needless to say, this does absolutely nothing to show what forecasters at the ECB think post-Liberation Day. Liberation Day in the U.S., this, of course, the day that reciprocal tariffs were announced and spooked the markets. None of those things are in this forecast yet. And so there's room for all of that to still appear. Now, As it stands growth-wise, the situation in the Eurozone is certainly not a happy one. We have the composite index here for the PMIs. In fact, these numbers were just updated over the past 24 hours from S&P Global. They released the final set of May's numbers. And we can see they're ever so slightly better than the initial release. The first estimate was that actually the whole of the economy contracted in May. As ever, these PMI numbers are centered around a neutral level of 50. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. That composite number was in contraction mode when the initial estimates came in. It got revised to basically standstill. Nevertheless, both services and manufacturing record a narrow contraction in May. So the economy here is, let's say, at best, idling. Now, against this backdrop, the latest CPI numbers tell us that we're back to the ECB's target. We're down to 1.9%. That's the lowest since this spike low to 1.7%. We can see that was short-lived, and we kind of edged back into the top of the range, largely as this wedge of additional positive contribution to inflation from this category right here, housing, water, electricity, gas, that's energy prices, it started to rebuild here. We can see this was, of course, the shock from the Ukraine war starting. Then there was a statistical adjustment where that rolled over out of the numbers, and we can see that as this normalizes, we rebuilt this back right here. And so we had the spike down to 1.7. We rebuilt it as the numbers kind of evened out, and now we see a more pointed effort to get lower, a more even distribution for these various components of CPI, and perhaps even a more sustainable one. And so this looks like the kind of disinflation that the ECB may want to see. This, of course, is encouraging of rate cuts. And if we look at what bond markets are suggesting, it seems they envision more of the same ahead. These are break-even rates. They're for Germany, which is the benchmark economy for overall Eurozone performance. It's the largest still in the region, and of course there is no such thing as a collective Eurozone bond as such. In fact, Germany resists the creation of one, even in the current iteration of the government under Friedrich Merz, at least as far as lasting Euro bonds are concerned. And so this is our benchmark for sort of figuring out where inflation trends are going, because largely as they go in Germany, so too the region as a whole. And we can see here that after a brief spike in March, again, hold that thought because it is relevant. March is an important inflection point here. These things have started to trend lower. Now, the way you arrive at these is you take the difference between nominal bond yields and real bond yields. And of course, the difference between nominal and real is real extracts inflation out of the calculus. And so if you take the difference there, then you see what kind of an inflation adjustment there is. And so you get the sense of what the bond market's inflation expectations are. So you can see here very clearly that near-term inflation is biased over the course of 7-8 years or 5 years, sort of the relatively kind of medium-term window and a little bit more. It's biased below the ECB target. And you really only get sort of slightly higher readings, but very much sort of contained as far as ECB objectives are concerned. Here's the 2% target. You're a little bit higher, but nowhere near sort of challenging what the ECB would say is an inflation risk, at least not here. So the bond market seemingly saying we're going to have low inflation. It's trending lower. That makes sense. The economy is weakening. And from that perspective, the ECB might well need to be more dovish, not less. Of course, as we just saw, the outlook is relatively modest. Rate cuts seen happening for the rest of this year, maybe one more after this one, maybe two, but next year, nothing. And the fact that we haven't factored in these tariffs in their wholeness, or at least made the attempt in ECB forecasting, that may set that stage. We can see here that the U.S. runs a trade deficit with Europe. Of course, the president rails about it often enough that we would know that, but we can see here that indeed the tariffs might be a disinflationary force for Europe, because if they mean that Europe has to sell less to the U.S. because tariffs undermine demand, well, then you would get a hit to the economy of some magnitude. Obviously, we're still back and forth on what kind of tariffs will happen when, but in so much as the Eurozone exports and derives positive contribution from those exports for its economic growth, and that's its relationship with the U.S., tariffs in that they might undermine those exports, they would be something that you could factor into the equation here and say, well, this is going to be a further headwind to growth, and on that basis, lower forecasts for growth, lower forecasts for inflation, and perhaps then get to more rate cuts. That is certainly one way that this might go. However, if we take a look at what's happened so far, and obviously this data is a little bit more timely than what's happening with ECB forecasting. This data is more recent than that forecasting. We see here that actually we have a fairly convincing rise in U.S. imports from Germany here. And of course, the latest numbers look particularly heady, but that doesn't necessarily sort of jump out. We've had similar kind of rises here. It is certainly notable that there's been a push through whatever congestion there was here. So maybe there's a degree of acceleration, and maybe this is tariff front running, one might say, much as we've seen with relationships elsewhere. Maybe this is just a way to kind of consider that what's going on here is the markets attempting to front run what may be greater tariffs, and so there's more stocking of inventories. But if we take a look at how this has worked month to month, I mean, you can clearly see that in the case of China. So in January, you see this massive surge in imports from China, and since then things have kind of cooled off because the front running was so dramatic. You don't really see that in exactly the same way in Germany. We'll of course have to watch it and see, but you get this sort of jump in January, then things cool off considerably in February, and you have a similar pop to January's in March. So it doesn't look like you're sort of jumping out of the window, as it were, on the volatility in these statistics the same way, for example, that you would be in Mexico, where you have a giant surge, the same way as Canada, where you have a giant surge. So all of these kind of usual suspects for the trade war so far, the members of the USMCA and China, you get wild swings in the double digits. You don't really get that in Europe. So it's unclear really how much this front running matters. But if, in fact, the bond market is already telling you that the way that inflation is going to trend is lower, and that's been happening here for a while,